huge pressure from the Russian government and Vladimir Putin to his generals that come May 9th, that is the victory day, the Soviet victory over Nazi Germany, he needs to get that victory. He needs to show something. And by the way, yesterday, when he tests that missile, all of this is for domestic consumption. The Russian public is reeling from that cruiser ship that went down last week. He needs to show something now and present it as a victory. And I'm not sure Mariupol at this point is going to cut it or be seen as enough.
And Marie, you talked about the 9:45 press conference with President Biden. We also are going to be hearing from Treasury Secretary Janet Yellen around 11 a.m. She, of course, walked out of that G20 meeting yesterday when the video appeared of the Russian delegate. What are we expecting to hear in terms of additional sanctions, in terms of, frankly, what they are prepared to go forward with as this conflict goes on?
And not just Treasury Secretary Yellen walked out. We also had Andrew Bailey from the Bank of England. We had Jay Powell. A number of individuals walked out of that meeting, and you can see it on Canada's Finance Minister Freeland's Twitter page, those waiting outside while you had Russia talking. Now, obviously, this was very symbolic because Russia is still participating in the G20. What you can expect from Treasury Secretary Yellen is how the sanctions the United States and their allies are imposing on the Kremlin are starting to hurt Russia economically. But what we have not seen so far from the sanctions is being able to stop this war on the ground.
AMH, great to catch up as always. Anne-Marie Hordern there in Washington, D.C. alongside Maria Tadeo in Brussels. Tons to get through in this equity market, including Tesla. Tesla in the pre-market up by more than 7%. RBC raising their price target by about $140 to $11.75. Tom, implying some decent upside from where we are right now at 10:48 in the pre-market.
It's a joy after the carnage of yesterday, and Netflix as well to see. And again, my first, when I look at the PE, John, I still go back: is Tesla a tech company or a car company?
And the broader question yesterday: do we have a Netflix problem or a market problem? And Lisa, for big tech yesterday, some of those names I mentioned it earlier in the program. Facebook, Meta got absolutely hammered in yesterday's session.
Well, and this has to do with perhaps two different types of companies, right? You've got the cloud companies, and then you have the ones that really have benefited from the lockdowns and the pandemic, and the ones that do depend on consumer appetite. How much do we see dispersion? And we're going to be speaking with Dan Ives, who's really been talking about that later in the program.
Looking forward to that later this morning. A nice snapback on the NASDAQ 100. That equity market is up by a little more than 1% on that index. On the S&P 500, futures up 0.75%. Yields are higher too. We'll spend some time on that a little bit later this morning. Up 4 basis points on a 10-year to 287.28. From New York, heard on radio, seen on TV, this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bouncing back from yesterday's losses on the Nasdaq 100 from New York this morning. Good morning. On the Nasdaq, up a little more than 1%. Looking at the member weightings of the Nasdaq 100, you'll see Tesla at about 4.7%-ish of this particular index, and Tesla's doing nicely in the pre-market. Two names to look at. One is Tesla, one is United Airlines. Tesla up right now by a little more than 7%. United Airlines, really, really robust demand from the American consumer for both leisure and business travel as well. We'll catch up with Scott Kirby a little bit later this morning. That stock is up by 7.5%. That's the equity story. Let's look at the bond market picture, and let's look at the United States and look at Germany as well. And look at the front end. Highs of the year right now on a 2-year in America at 261.33, just off those highs right now. On a German 2-year, up almost 10 basis points on a session to about 14 basis points. We've heard from a lot of policymakers at the ECB. Some of them very, very hawkish, so they're saying what you'd expect them to say. But when you get someone straight down the middle of the executive board, of the governing council, the ECB Vice President Luis de Guindos talking up potentially TK, unwinding that QE program by July and following it up perhaps shortly thereafter with a rate hike, that gets your attention.
July's tomorrow, isn't it?
It feels that way. It feels that way.
Still get it.
And when we talk about data dependence, what did Kit Dukes of SocGen say? What data? The elephant in the room for him is still that war, Tom, in Ukraine.
Yeah, this is a really important reset here at the end of April with the IMF meetings going on and such, John. There's still a war. We got to say that every day, don't we?
And we've got to work out the policy implications of that still, Tom, because the French, as far as they're concerned, are still pushing their European partners to institute some kind of crude ban, Russian crude ban. How would that set things up for the ECB through the summer and into the back end of the year?
To get to our next conversation here, headlines from Russia. The Duma of Russia confirms the central banker, Ms. Nabulina, for a third term. I don't think there's a surprise there, but a bit of a surprise early in the morning as I scroll through, and it's real simple. Discussion of consulates in the Baltic states. That sets up an important conversation with the European Commissioner for Trade. He's a former Prime Minister of his Latvia. Valdis Dombrovskis joins us right now, and we've had many conversations over the years. Mr. Dombrovskis, I have to rip up the script and speak to you of the sea changes from Lithuania to Latvia up to Estonia and across to Finland. Your area is in a tumult we've really never seen since World War II. What do you need from America, from NATO, and from your Brussels, frankly, to provide courage to your Latvia and, for that matter, courage to Sweden and Finland?
Good morning. Indeed, Russia's aggression against Ukraine is having implications across the entire region, and it actually undermines the entire European security architecture. And clearly what countries in the region like Baltic states, like Poland, are looking for is NATO's presence on the ground strengthening of defense capabilities, and clearly also support for Ukraine. Because it's clear that if we do not stop Putin in Ukraine, he will venture further in his aggressive war. So that's why it's so important also to make sure that we provide all necessary support to Ukraine to stop the war there, but at the same time also step up the preparedness in the region.
Your Latvia does not touch upon this exclave of Kaliningrad. It touches Lithuania and Poland, but it seems to be front and center. Explain to Bloomberg's global audience how we defend ourselves against the reality that Mr. Putin wants some form of bridge to his exclave. He can only get there by water. Compare that to what we see now on the shores of the Black Sea and the path from Russia to Crimea.
First of all, it's more than excuse than any real concern, because reality is that Russia has a corridor possibility to transport people and goods between mainland Russia and Kaliningrad enclave, doing so both with railway and with road transport. And already also now, when EU is putting lots of sanctions against Russia, this corridor is not being subjected to sanctions. So that's indeed more as an excuse which Russia is trying to use potentially to close down what is called a Suwalki corridor, which is connecting Poland and Lithuania. But it's worth noting that it's all a territory of NATO, so that's why it's very important that there are proper NATO defense plans in place, also against this kind of scenario. And you also raised questions concerning Finland and Sweden. As we know, both those countries are currently considering a possible application to actually join NATO.
Right now, we're talking also about the potential consequences, additional consequences for Russia. A number of European nations have called for a full embargo of oil from Russia. What would that do to member states in terms of economics?
Indeed, since the beginning of Russia's aggression, EU has implemented already 5 rounds of sanctions against Russia, and now we are discussing possible next sanctions, which, among others, include a possibility of some kind of oil embargo in one form or another. We have done this assessment of what implications it's going to have for the European economy. If there is a sudden cutting off of Russia's hydrocarbons, not only oil but also gas, and the conclusion is that not without problems European Union can cope with this scenario. Well, as regards oil, there is a global oil market, so there is a possibility to find another suppliers. As regards gas, we are now working very intensively to diversify gas supplies, including from LNG, including from the United States, but also to accelerate the green transition, rolling out of renewable energy, so basically working at full speed to reduce the dependency on Russian hydrocarbons.
Valdis, you talked about a potential oil embargo in one form or another. There have been some questions about how severe these embargoes could actually be, given the reluctance by Germany, namely, to really go forward with this because of their dependence on Russia, yes, for gas, but also for oil. How quickly could something be implemented, and how strict could this embargo be?
In terms of speed, we are actually ready to move up very fast as regards the technical work. So it's mainly the question of reaching political agreement, because sanctions are agreed in the EU at the principle of unanimity of all member states. So all 27 member states need to agree. That's why those political consultations are now ongoing very intensively. But technically, we are ready to move very fast. As our first sanctions packages had shown, we are ready to put them in place in 1 or 2 days.
To cut to the chase, Mr. Dombrovskis, with your 24/7 work and the work of everyone in Europe, are you essentially waiting for the outcome of the French election? Are people like you essentially on hold until Monday?
Well, it must be said absolutely not. And as you noted before, France has actually voiced its support for oil embargo. So that's not something which is holding us back. And that was not something which was holding us back, for example, to presenting the fifth sanctions package also in this very same pre-election context. It must be said that there is quite a degree of determination and unity in the EU to stop Russia's aggression, to put pressure on Russia through sanctions, through other means, and to provide maximum possible support for Ukraine.
Valdis, do you get the impression that the Europeans have finally learned the lesson of dealing with Russia? Given what happened at the end of the first decade of this millennium, warning one, Georgia, another warning, Crimea, and yet the Germans, it was just business as usual with the German government. Have we finally learned that lesson?
Clearly, I think there is now quite a broad acknowledgement that there were mistakes made, also not reacting in a firm and determined way against Russia's aggression against Georgia, annexation of Crimea, and other events. So from that point of view, one can say, yes, this lesson is finally learned. And actually, as you know, the Central Eastern European countries had been ringing alarm bells already for many years. So finally it's heard, and there is a firm and determined action. And it's important that we stay the course, that we stay consistent, and make sure that this war is really stopped and Russia's aggression fails.
Commissioner, you've been a good friend to this programme over the years. Thank you very much for being with us again this morning. Valdis Dombrovskis there of the European Commission. Tom, warning after warning for the German government. And there are some people who still today believe that perhaps the German government has still not learned that lesson, Tom, and are still resisting the effort to go that step further, still.
You know, it's not for us to put our opinion into it, but I will make the strong opinion, John, that we're all revisiting Western Civ from 30 years ago. I mean, it's just amazing to consider what's going on from Sweden and Finland, that 800-mile border with Russia, down to Ukraine, and frankly, farther south than Ukraine. I mean, I think you can talk about where we're going to be in discussing Turkey here in the coming months and years as well.
Lisa, it begs the question, doesn't it, whether we've fully realised the consequences of all of this quite yet from an economics perspective, and I think for some people the answer to that is no.
Well, going forward, as well as looking back in terms of what the deliberation was, to your point about whether Germany has still learned the lessons in terms of how quickly to move away from oil and gas, they're kind of handcuffed, right? We've got to recognize that they are really struggling with how not to torpedo their economy, and how do you deal with an aggressor at a time when you are so reliant on them going forward. And I do keep going back to that $150 Brent call that we heard from Goldman Sachs, and how much that must be petrifying for places that are seeing inflation climb.
Coming up on this programme, we'll catch up with Claudia Sam of the Jane Family Institute on this economy domestically in the United States, with yields higher by 4 basis points on a 10-year in a Treasury market to 287.47. From New York City, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russian President Vladimir Putin calls it a move that would give the US and its allies something to think about. Russia says it test-fired a new intercontinental ballistic missile. Putin says the weapons will defend the country against outside threats. The Pentagon says Russia followed normal notification procedures before the launch. Group of 7 finance ministers and central bankers have condemned what they call Russia's unjustifiable war in Ukraine. They say they'll work to isolate Russia from the global economy. The G7 also told international organizations they shouldn't conduct activities with Russia in the usual way. Hong Kong is beginning a slow path back to normality as the city's worst COVID outbreak wanes. Gyms and sports facilities reopened today after being closed since January. Restaurants will stay open later and people can meet in larger groups. More restrictions will be eased in the next few months if new cases keep on dwindling. And shares of United Airlines rose after the company forecast a profit this year. United expects its second quarter operating margin to be about 10% as consumers resume air travel. That would end a string of what's been 9 straight quarterly losses. And a surprising turn of events in college basketball. Villanova coach Jay Wright has resigned after leading the team to 2 national championships. The Wildcats just played in the Final Four, where they lost to the eventual national champion Kansas. There's been no word that Wright's decision was health-related or that he's going to the NBA. Villanova's new coach will be Carl Neptune, a former assistant who's been a coach at Fordham. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Moving purposefully to a more neutral stance that does not stimulate the economy, that is clearly demonstrated it can self-sustain, is a top priority. And this is where the question of timing comes in. I see an expeditious march to neutral by the end of the year as the prudent path.
And then what comes next? That's the big question for this Fed. Mary Daly there, the San Francisco Fed president. From New York City this morning, good morning. Equity futures positive on the S&P 500. A nice snapback on the NASDAQ 100, supported, of course, by Tesla, rallying hard in the pre-market. NASDAQ 100 up this morning by 1.2%. The S&P up 0.8%. Into the bond market, yields higher by 3 basis points. Call it 286.70 on a US 10-year. The US 2-year, 262.74. The high of the session is the high of the year at the moment, Tom. 261.33.
It's going to be interesting to see. And right now, she became a firestorm the last time she was on with us, John. And this is on inflation. And this is on the psychology of America. We could put everybody to sleep. We've been... Actually, people have said that I've put people to sleep before. You could read Kimball, Shapiro, Psalm, 2009, Risk Preferences in the PSID, Individual Imputations, and Family Covariation. Come on, Claudia, you're killing me. Out of the University of Michigan Inflation Combine with Matt Shapiro, Claudia Shapiro, Claudia Psalm joins us this morning with Jane Institute. Claudia, I want to cut to the chase. You are legit pro out of the Michigan Combine on the effect of inflation across the different deciles of America. Mary Daly and others, they can look from 60,000 feet. The working class, the middle class, the subclass, the rich, all those partitions, how are they affected by this historic inflation?
Right. Well, you're absolutely correct. Inflation does not affect us all in the same way. I mean, frankly, just inflation prices are not this big blob of an aggregate number. It's everybody, like what we put in our shopping basket, it differs, right, in a lot of ways. And what you have to pay for, say there's people who working class, even up into the middle class, they spend a lot more on necessities, on gas, on food. Right now, I mean, for a while, housing that have been just not affordable, and they're the things we talk about that are the prices are rising, right. and rich people they're doing okay. Like I'm not worried about them, but inflation's complicated because it has it can benefit people that have a lot of credit card debt. Ain't so good for bondholders, right? So like there's a lot going on, but the big thing is high prices, high inflation. They're disruptive. Like they make life challenging.
Okay. This is important. Come on. Michigan owns the high ground on this. You studied there. Alan Meltzer's rolling over in his grave at Carnegie Mellon because Alan Meltzer wants to go aggregate. Mary Daly's going aggregate. Chairman Powell's going aggregate. Can we beat 7% inflation going aggregate, or do we need a Fed that actually has to understand the decile impact?
But so I firmly believe in the Fed on this one. Like, if anybody knows how to get this under control, it's Jay Powell and his team. Now, I will say what is very disconcerting, and you talked about the war in Ukraine just earlier in the show, food and gas prices are totally out of control of the Fed. Right, they would have to cut demand in a way that would be absolutely frightening to get people not to drive to work as much and bring gas down, or tighten the belt and not feed the kids as much. So but there's a lot they can do on all the rest of the stuff we buy, right? So they're making progress. The last consumer price index report, month over month, was kind of encouraging.
Okay,
a long way to go, but
Claudia, let's say, I mean, the idea here is that perhaps you don't believe that the Fed has to go quite as quickly as some of the more aggressive hawks out there. I do wonder, though, how much you have to reassess when you do see things like housing prices continue to climb, or housing starts continuing to climb beyond expectations, despite the tightening that we're seeing in financial conditions.
Right. Well, to be clear, I mean, my baseline is 50 basis points in May and June. Right. I think it's pretty clear they're signaling two moves, not just one. I think that's appropriate. The housing mortgage rates, I mean, they have gone up. The Fed raised 25 basis point. Mortgage rates are up 2 percentage points. Right. It is clear that there is some of this. I'm going to buy now before prices go even higher. So I think it's going to take a little while for us to see the cooling. But like Jay Powell cannot print houses, right? Like we have a big problem, and we have had a big problem for decades of affordable housing and underbuild. So maybe this is a wake-up call, like build the houses.
Claudia, what do you think would be a restrictive policy rate?
I wouldn't, the Fed, and I don't think they'll do this, if they really start running out of the gate. I know Jim Bullard was putting out a hypothetical, but I think like 275 basis point moves would overdo it. I mean, particularly, we're going to keep getting, say by the June meeting, a lot more information about the economy. I mean, it is, if they go too hard and the world serves us up, a particular set of conditions, I mean, we could have an undershoot next year. I mean, I think that'd be okay. But I mean, you can't overdo it. You got to see the data, adjust to the data. It's absolutely clear they need to go harder, but not too much.
Claudia, that's a big call, that is. That if they went too hard, we could have an undershoot of their inflation target next year. What would too hard be to get inflation back below 2%?
A recession. I mean, But a
recession you think would achieve that? I mean, the reason I ask that is because some people think that you could actually get a contraction in growth while prices are still elevated above 2%.
Yeah, good luck with that. I mean, anything can happen at this point. Nuclear winter is inflationary, right? So I'm not, things could be bad. But right now, and we lose sight of this, we have an economy that is back on track. We are on trend for inflation-adjusted consumer spending, inflation-adjusted business investment. We never got that after the Great Recession. The labor market, jobs, they are there. So stagflation.
Claudia, we're running out of time on the clock here. Farrell's got to close out the hour, but we're among friends here. What's Larry Summers get wrong on this? I mean, you just basically said the stagflation hypothesis is nuts. What's he get wrong?
Well, I haven't heard Larry talk about COVID for a very long time. I don't think there's a serious discussion about the Ukraine. I don't know how you missed that. Whatever. It's useful to have somebody going around saying the world is, stagflation, inflation, recession. It's worth talking about, but his story just does not stand up. It's not the 1970s.
Claudia Sam, thank you.
Thursday morning wrestling.
I can see a panel developing here, Tom. You think we get the former Treasury Secretary on alongside
We could
Claudia
get Sam and Summers on stage at Davos, John. It'll be great.
Step back, TK, and let them do their thing and not get involved for about 6 hours. Claudia Sam there of the Jane Family Institute.
Claudia, thank you.
Hey, TK, two views. That's what it's all about.
I'm sorry, it's just classic economic debate, and with great respect to Professor Summers and Professor Sam, you know what? This is what makes it go.
We'll get the market debate up next from Citi with David Bailey.
Makes it go too.
I bet if you spike it too, it makes a big difference.
Yeah,
Futures,
I've done that.
I've paid 10 at 1%. You're doing that. Yields up 4 basis points on a 10-year, 287.28 from New York on TV and radio. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Worried about what we're going to see in terms of the economy in the second half of the year as rates go up.
I think we have to really look and see where global yields are heading.
When you see yields do what they've done so far this year, this has been the worst year in the history of statistics.
The longer part of the curve looks pretty appropriate. I think we can expect the Fed to try to move up the short end.
The Fed is clearly in uncharted territory.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equities bouncing back on the Nasdaq by more than 1%. The earnings so far, TK, pretty decent after the close yesterday.
Yeah, and you're dead on, John, about like what do I focus on away from the cacophony of news we have. And, you and I chatted up David Costin after his 10 o'clock effort yesterday with Bloomberg. And I'm sorry, this guesstimate of earnings growth, John, is underreported right now. It's a mystery.
Well, TK, you've made the point on nominal growth, global nominal growth this year and next year, and perhaps that's supportive still of things for earnings.
I sound like a fossil, and my lead fossil when I was younger was the giant Phil Correa of Pioneer Group. I think he died at 104, and it was Mr. Correa, trust me, John. And Mr. Correa would lecture me on the bright lights of inflation. It's a different glow, and those younger are getting used to this new glow.
Lisa, the numbers last week from Delta, tremendous. From United Airlines after the close yesterday, pretty decent. American Airlines this morning.
Yeah, American Airlines beating estimates. Those shares up more than 7.6% in the immediate pop-up after reporting earnings. Basically, they see second quarter total revenue of 6 to 8%, which is higher than the second quarter of 2019. So we are now exceeding where we were pre-pandemic because of everybody who wants to go out there and be traveling. And how much is this representative of the broader economy, John? And how much is this a specific story to the reopening of, frankly, the world?
Scott Kirby of United Airlines, we'll catch up with him a little bit later this morning on the demand backdrop. He said this environment is the strongest it's been in 30 years in the industry, Lisa. It's hard to reconcile their ability to pass all this on to the consumer the demand for travel, which is absolutely surging, not business, it's all about leisure over the last 12 months, and now incrementally business as well, with what we've seen in the survey data. And that's something Wells Fargo are trying to get their hands around too.
And which survey data, right? So there is some economic argumentation about which survey data really reflects sentiment more appropriately. But at what point do we start to see some sort of retracement in spending? And how much, Tom, you've been talking about this, the deciles, how this is a different story depending on the income level of who you are, and how that reflects in the economy will be a motley picture.
Lisa, do you think that if you say leisure, it's like an American one-day vacation? And if you say leisure, it's like a freaking sabbatical.
Do you want to do that now? Do you want to do that now?
Leisure means look at your work email every half hour.
Exactly.
Leisure means, go.
We can do vacation and holiday as well if you'd like. Do you want to do vacation versus holiday? Don't you think holiday sounds better?
Holiday sounds way better.
Holiday means the whole of August.
Yeah, and then if you're Francine, you say vacances and you move on from
TK,
there.
you've always been bitter about that, the European holidays. I know that.
It's another world. It's
a world that you want to be part of.
You got that
Let's be
right.
clear. Me too, I miss it. Futures this morning up 0.8% on the S&P, on the Nasdaq this morning. Good morning to you all. Up a little more than 1%. Tesla very supportive of that particular index. Yields are higher by 4 basis points on a 10-year to 287.47. Just short of a 109 handle on euro dollar at 108.98. And a conversation, Lisa, about higher rates at the ECB.
Yeah, to me, this is really fascinating. The idea that you have the ECB vice president coming out and saying, actually, we could end QE in July and raise rates subsequently after, confirming some of the more hawkish discussions from other ECB members. Okay, we're talking about people traveling. We're talking about leisure versus leisure, and we can do that because so many people are actually employed. 8:30 a.m., we get U.S. initial jobless claims. The expectation is for another decline in the number of people filing for jobless benefits. To me, the question is, are we fully employed? Have we seen the participation rate kind of plateau at that lower peak than pre-pandemic, or are we going to see more people come into the labor market as wages do continue to climb, and frankly, as people want to go on their leisure or leisure trips? And at 9:45 a.m., we hear from President Biden. He's going to be giving an update on what's going on with Russia and Ukraine. Very curious to hear how Russia's claim that they have taken over Mariupol changes the conversation. A key strategic piece of land. How much are they willing to go harder with sanctions? How much are they willing to provide more aggressive weaponry to the Ukrainians? And at 12:50 p.m., Fed Chair Jay Powell and ECB President Christine Lagarde speak at the IMF seminar. This comes as German two-year yields climb to the highest levels going back to 2014. Wow. John, who do you think is going to be more interesting to listen to? Fed Chair Jay Powell or Christine Lagarde of the ECB?
Well, I have to say, based on news conferences, Chairman Powell, how this goes, I have no idea. Based on the recent news of this morning, it's going to be interesting to see if President Lagarde pushes back in any way, shape, or form against her vice president, Tom. That's going to be interesting later.
I know we got to get to David Balaam, but this is too important. To Lisa's comment there on labor participation, John, underplayed yesterday was the J.P. Morgan Oil Energy Outlook, which was a primal scream on building oil demand. That's maybe the most optimistic thing I've seen all week.
And where the consumer stands with oil prices where they are right now. Wells Fargo say this. This was from Chris Harvey, leading the equity coverage.
Please.
Despite what consumers are saying about inflation, they're still spending. Bank earning calls indicate the U.S. consumer remains very active. Let's get the view from Citi. We can do that with David Balin, the CIO and Global Head of Investments at Citi Global Wealth. David, let's start there. Just how supportive is this consumer of this equity market? How robust, how strong is the American consumer right now?
Well, the American consumer right now is actually weakening relative to what they were just a few months ago. When we take a look at March data, we can actually see that unit volumes are down in terms of what they're buying. But the good news of it is they're willing to buy certain things, right, regardless of price. And you've talked about those leisure or leisure things. They're willing to go, travel. But overall, they're weakening. Real wages are going down, and they're having to make choices between the things that they actually buy. I do think, that as Lisa talked about, we're going to see more labor participation and more people entering the workforce given higher wages, and that's a good thing. But overall, the GDP in the United States will be potentially significantly lower, 1% lower by the end of the year than it is today.
David, your research note makes very clear you find high yields, low bond prices. In the words of John Templeton, bonds seem to be on sale today. Are you long bonds?
Just yesterday, Tom, we decided to change our asset allocation. You know, the U.S. Treasury long bond has done the worst it's ever done over the course of the last 6 months. In the last 2 years, it's lost a third of its value. We actually went long duration yesterday in our core portfolios for the very first time in probably the last 15 or 20 years that we've wanted duration. We believe that peak rates are going to be hit this year, whether it's 3 months from now or 6 months from now, we're going to be at peak rates. And for that, I think bonds are back. That's going to be the bottom line. You're going to want them in your portfolio. You're going to get paid something in real terms. You're going to have the possibility for appreciation. And I think that's going to be a major part of the story as we go out for the next 3 to 6 months.
This is really important, David, and it actually pushes back against some people who say that the Fed is losing some control over inflation expectations and isn't going aggressively enough, and that will lead yields to be higher over a longer period of time. What's the path to get there? Do you see a recession sooner as a result in order to get that drive into duration, or do you see it being the sort of sanguine path where people realize that they're getting more yield than they have in years?
Well, the Fed has actually, put us in a pretty difficult position because they've become very hawkish about, inflation. And the type of inflation that they're trying to control is exogenous, meaning that it is from the pandemic, it is from the war in the Ukraine, and that is not something that the Fed can really control the inflation of. And that in order to try to do it, they could crush the economy, which is the recession scenario. And the way they would get to a recession is not only by raising rates, but doing enough quantitative tightening to cause credit spreads and other things to really blow out. And they could do that. That's possible.
David, yesterday we witnessed Netflix, and I know you don't talk about individual stocks with all the regulations in that, but how do you avoid a Netflix? Is it a profit analysis? Is it a concept analysis? How do you try to sidestep a Netflix?
This has a lot to do with expectations and a lot to do with how the analysts build their models. And without using that specific example, I will just say that the biggest surprises on the downside, Tom, have been stocks where the expectation of the investors has simply been grossly unrealistic. Think about Netflix in terms of what it is. It is a consumer discretionary item. It does not have an ever up stock price and number of participants. And in the environment that we just described, a consumer is going to have to choose between filling their gas tank, taking a ride in an airplane, or watching Netflix, especially, given the fact that they're now leaving their homes. So the necessity of it is actually changing. And my overarching point here is we have to look at real cash flows, right? The way the company is properly valued given the environment that it's going into. With slower growth in the future, whether it's in China or in the United States or in Europe, all of this suggests that we have to find companies with sustainable and increasing cash flows in the new, slower growth environment.
That is exactly what Michael Nathanson said yesterday about Netflix, precisely what he said. David, great to catch up, buddy, as always. David Bailyn there of Citi Global Wealth. Bramo, bonds are back.
Bonds are back.
To me, that was huge. Just yesterday, decided that actually it makes sense to own duration. The why is going to be interesting, and to the Netflix point, to the equities point, if you think that duration has value here, does that push you back into stocks, or does that actually go in the opposite direction because it portends possibly some sort of recession or at least slowdown?
To both of you, because I'm in triple leveraged all cash, I really don't care. I'm not going to extend duration. But John, to both of you, how lonely is Bank of America in the David Bailyn call? How alone are they right now?
In terms of getting long bonds, Tom?
Yeah.
I think they're pretty lonely at the moment. We've still got to work out what QT means for this bond market. That's difficult. I think that's really difficult still, because when I ask that question of people in the bond market, there's still a big divide. But this is how it starts. People start to nibble away. I imagine the team at PGIM, Lisa, are probably on that side of the trade as well, looking at what Bank of America is saying to do and listening to David Bailyn there too.
Well, and Kathy Jones also doesn't really see the chance that we're going to get much higher than 2%. I believe she will come on, I'm sure, to talk about it in the Fed funds rate. I do wonder, though, what this means going forward and how they're going long duration right now.
I'll catch up with Priya Misra of TD a little bit later. She's got doubts about how far this Fed can go. We need to talk about these airline names as well. American Airlines joining United Airlines in a pre-market with a really nice pop higher, up by more than 8%. American up by almost 9%. The numbers from earnings this morning look decent. Demand for domestic travel has steadily improved. They say demand for international travel has picked up considerably. The airlines this morning looking decent. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Russia's President Vladimir Putin has declared that his forces have seized the key Ukrainian port city of Mariupol. It would be the biggest city taken during Russia's 2-month invasion. Russia's defense minister says more than 2,000 Ukrainian troops are still holed up in an industrial complex in Mariupol. Putin's demanding that those troops surrender. The U.S. Justice Department will appeal a federal judge's ruling that threw out a mask requirement for public transportation. That sets up a legal fight that could last beyond the midterm elections. Many airlines have now dropped their own mask rules, but some transit operators have left the requirement in place. AT&T had a favorable start as it parts with its media business and returns to its roots as a telecom giant. Wireless subscriber growth was better than expected in the first quarter. Earnings also beat estimates. AT&T spun off and merged its Warner Media division with Discovery. Shares of Tesla are rising today. The electric vehicle maker reported better than expected results for the first quarter. It easily beat estimates with a record profit. And the CEO, Elon Musk, predicted that output will grow at a fast rate the rest of the year. That's despite those supply chain problems. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells. No one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Front Row explains Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
We have to consider which sanction hurts and hits Putin's war chest, and which sanction in the short term hurts us more than him.
The German Finance Minister, Christian Lindner, there speaking to Anne-Marie Jordan down in Washington, D.C. We'll catch up with AMH in just a moment. Your equity market's shaping up as follows this Thursday morning. Good morning to you. Up 0.8% on the S&P, up a little more than 1% on the NASDAQ 100. Tesla supported of that story. Tesla earnings good, United and American even better. Look at those two names in the pre-market, absolutely surging. A nice pop by more than 8% on United, up by more than 10% of American Airlines. We've talked about that return for the domestic leisure travel story over the last 12, 18 months. Now it's all about international, about business travel making a comeback. And TK, some of these names, it's Delta, United, American across the board over the last week, delivering some decent numbers and a decent guide.
Well, it's a healing with the huge government support that they got. And I don't know where the accounting is on the government support, but the answer is we kept the transportation network going. But as Lisa mentioned, John, to me, it's hugely, hugely behavioral. I mean, people are willing, John, to plan vacations, get stuck in Atlanta, end up sleeping in a hotel for the weekend.
That was a low blow. That was a low blow.
I'm still struggling here. Really? Are we doing this? How about the other one that got canceled? Look, this has not been an easy return to traveling for some people, theoretically. And yet, even those theoretical people are still planning additional vacations.
I was going out to Cincinnati, and I had a 6-hour plane delay, John, and I got to admit the airline handled it really, really well.
Did they?
6 hours.
Did they? Because Bramo's not happy with her airline of choice at the moment. They reported last week.
I think we should move on.
We can talk about the price of that experience. The price of that experience. Tom, looking at some of the prices for summer travel,
it's up there. You talk to our team, George Ferguson, and we've got United on television and radio coming up for Across America with Mr. Kirby. And John, I'm sorry, this is the raging debate in airline economics, which is called price elasticity, which is where Abramowitz sits at home and goes, "You've got to be kidding me."
And Tom, I just wonder if they keep holding back capacity just a little bit through the rest of the year.
They learned that lesson. Robert Crandall, the giant of American Airlines, will tell you they learned their lesson after losing money 6 cycles.
Have they learned the lesson on buybacks? I'll ask that question a little bit later.
Oh, I look forward to that one.
Scott Kirby, about 9:40 Eastern Time, Tom, on Bloomberg TV.
Okay. Should we get to it? Let's get to it right now. We've got a lot of news going on. Anne-Marie Jordan in Washington at the meetings, World Bank, IMF. Maria today on Brussels. Maria, I'm absolutely confused right now. Not to say a term, the zeitgeist, but this battle down in the Black Sea, the distance from Mariupol to Odessa is tangible. Maybe Odessa's next, but is Mariupol captured or not? Conflicting reports this morning.
Yeah, very much. And Tom, it really depends who you ask. Right now, as we speak, the Russian television is showing pictures of Russian troops and separatists who are talking to people in Mariupol. Of course, you can argue that a lot of this is staged, but nonetheless, those are the pictures that get shown in Russia, in which they say you have nothing to worry about. The Russian Federation is here and you have been liberated. That is the spin that Russia will put on this, to say that by now they control the city and therefore they've taken Mariupol. When you speak to Ukrainians, however, and Ukrainian officials, they tell you for as long as that plant, that steel plant holds, and there's Ukrainian soldiers on the ground, this will be Ukraine. And we've not surrendered and we've not given up
the city. Now, a lot of this is a battle for narratives, but what really matters, and this will really tell who's the winner here, is Russia able to create that bridge from the Donbass to Mariupol and therefore to Crimea and the Russian Federation? If they're not able to do that and it doesn't work practically, then you could argue this is still controlled by Ukraine.
AMH, we hear from the president a little bit later this morning. What are you expecting?
Well, we're hopefully going to get a reaction from the president on what is going on in eastern Ukraine, but what we are expecting for sure is more military aid and support. And this would have come from the presidential drawdown, which means it doesn't have to get through congressional approval. It can go right from U.S. stocks over to Ukraine. We're expecting $800 million worth. So this just adds to the millions and millions of dollars, now billions, that have been sent from the United States to Ukraine. In terms of what to expect, officials briefed us earlier this week, are reporting, is that's pretty much the same ammunition, maybe helicopters, that have been in line from previous drawdowns of U.S. stocks over to Kiev.
Maria, I wanted to follow up on something that you said with the Mariupol point and how it's going to be a messaging tactic to try to get Vladimir Putin to be able to say he has some sort of victory. I was looking at this independent poll that was taken of the Russian public a couple days ago that actually showed that support for Vladimir Putin inside of Russia has been climbing to near record highs. How do you square that with this belief that people are going to turn against him within Russia and that they are feeling the impacts of what's going on with respect to the economic cutoff of all of Russian business?
If you ask me, and maybe this is not politically correct, but I think that is the theory that in the West we like to think of it. Like, this is just Vladimir Putin's war. The Russian people don't support it. They're oppressed. And this is all propaganda. Having said that, when you look at this from the Russian perspective, you look at the Russian news, you look at the way this conflict is being presented for many Russians, well, the country's acting like a liberator. Ukraine is a Nazi country. Right. In Russia, when you call someone a Nazi, is the worst of all insults. We really have to stress this. It completely dehumanizes the other person. And for many Russians, what they fear or they believe is that this is a war that is fair and also in many ways completely valid.
Maria, I'm sorry, Maria, I got to ask Anne-Marie a domestic question because, you know, we're all international this morning with everything going on. Anne-Marie, I hate to put this out there, but let me do it for the first time. Is Joe Biden a lame duck president?
Oof, Tom. Well, let's see, right? I mean, let's see what the midterms deliver for this Democratic Party.
You got to wait for the midterms.
Yes, let's wait for the midterms. Also, let's see if he's going to, the midterms will decide really what the next 2 years bring for the president. If you do have a red Congress, obviously, and a blue executive branch, there's going to be a lot that's going to be difficult to get through. Potentially, the international sphere will be the only place you're going to be able to see legislation get through in terms of some more support for Ukraine. But after that, then yes, 2 years, it'll just be constant infighting, fighting within parties, and then infighting between who will then take up the mantle for 2024.
Precisely. And Tom, I wonder if that's the deeper question you're asking here. Are you asking about the outcome of the midterms, TK? Or are you asking about whether he's running in 2024?
Yeah. I think it's both. I think it's all wrapped up together here. And I think the nation, with this inflation, this tangible weight on them is getting way out front of the politicians and the zeitgeist and, you know, the people that make the story like Anne-Marie Horton. I think the nation's way ahead of the politicians right now on saying, fix this and let's move on.
AMH, down in DC, Anne-Marie Horton alongside Maria Tadeo. I've been asking a few times this year whether the calendar is on the president's side when it comes to inflation. On year-over-year inflation, I think it well could be. Peak inflation could be in the first quarter, Tom. Maybe a little bit of leakage into spring, into Q2, but then from beyond, things could get better. Can it get better enough, Tom? Can inflation come down to 4, 5? It's a big ask still.
I would guess the Democratic strategists could say, yes, if you get the trend in place, that helps them in November.
Yields up this morning, 4 basis points, 287.47. Equities doing better than okay. Up 0.9% on the S&P, on the Nasdaq up by 1.2%. From New York, this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
For the airlines, so far, so good. Over the last week or so, Delta, United, American. United after the close yesterday, American this morning. The numbers pretty decent, supportive of this equity market snapback this morning. On the S&P up 0.9%. On the NASDAQ 100, the number 4 weighting on the NASDAQ 100, Tesla, makes up about 4.7% of that index. So a nice pop higher on that particular stock and on the index as well. The NASDAQ 100 up by 1.27%. Romain's going to run you through the single names in just a moment. I'll whip through the bond market briefly as well. And look at the 2-year in Germany, the 2-year in the United States. In the United States, Andrew Hollenhorst of Citi just publishing moments ago, talking up his call for 4 back-to-back 50 basis point interest rate hikes. He thinks that jives nicely with this idea that we get back to neutral quickly before the end of the year on the FOMC. Can the ECB make a move and get rates back into positive territory? That's the conversation as well. Kicking German bund yields higher on a 10-year, on a 2-year too. And briefly, just bleeding into some euro strength as well, TK. Euro dollar right now just short of a 109 handle at 108.82.
But the heart of the matter is, John, it's jawboning around waiting for economic data and waiting for these next meetings, including the Fed May 4th.
And the elephant in the room, and Kit Duke said it, Bramo, is still the war in Ukraine and the policy response from the European officials and what that means for this European economy.
There was a Fed research report that came out and said inflation was transitory, but then it changed because of the crisis and how there was new inflationary input. What happens if you don't get an end to that inflationary input, even as the economy recovers?
You bring up this idea of interest rate hikes of the ECB, this idea of getting rates back to zero sometime soon, and the amount of pushback you get from people still in conversations. And maybe that's what's behind this euro-dollar fade as well. People just still don't quite believe it can happen. Euro-dollar just short of 109. That's the cross-asset price action. Let's get some single names, some moves, and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Of course, it's all about Tesla today. Record quarter here for the company on an earnings basis, but really, it goes well beyond the numbers here. You talk about guidance that the company gives. They've been looking at a 50% growth rate. Elon Musk intimating on the conference call that that could be a 60% growth rate. And really, the Houdini Act that they've seemed to pull during this, all the supply chain challenges out there to continue getting those cars out the door here, even with the shutdowns in Shanghai and all of the other issues going on. They continue to meet and exceed a lot of Wall Street targets. We should point out with the shares up about 7.6% here on the day. This stock is on the verge of actually erasing all of its losses for the year. Remember, it was down as much as about 27-28% on a year-to-date basis to start the year. In fact, when you go through the NASDAQ 100, you look at the highest weighted members in that index, only one of the top 10 highest weighted names in that index has actually returned a positive price return to investors so far this year. That was Costco as of yesterday. As of today, it could be Tesla should these gains hold all the way into the close. Meanwhile, Netflix continues to move in the opposite direction, down 3.6% today after that 35% plunge yesterday. At least 12 sell-side downgrades just in the past 24 hours, and now we're learning that one of its biggest and newest shareholders has also thrown in the towel. Bill Ackman's Pershing Square, which disclosed just in January, late January, that it had bought 3.1 million shares, now disclosing that it has sold those shares. Bill Ackman saying in that letter that they've learned from past mistakes to sort of call in those bets early. Yeah. And how about AT&T, Tom? This is a company, of course, that just got out of the streaming business. Maybe it's good timing here. They just reported earnings, subscriber growth, and they're now a pure play wireless business coming in well above estimates.
Romaine, what did you learn in the close yesterday about Netflix? What was the thing in the set of conversations that stuck out?
I think the set of conversations with Netflix was way too slow to move to a more ad-based tier model in their pricing, something that Hulu has actually done very well. Obviously, Hulu not publicly traded, but we should point out Reed Hastings, they actually referenced Hulu, not by name, but it was very clear they were talking about Hulu, and that they admired the fact that they've been able to sort of find a balance between that subscription base and that ad-based subscriber tier.
Romaine Bostic, thank you so much. Greatly appreciated this morning. This is a joy. We tried to find the person at Goldman Sachs whose NCAA bracket blew up the most. Out of Villanova, Amanda Lineman joins us this morning. Their global credit strategist. They're thrilled that she could stop by. Amanda, we talk about active and passive investment in the equity market. I don't think bonds are any different. I want you to get away from the fancy talk of Goldman Sachs bonds and just say, how do you buy active bonds versus buying passive bonds?
Sure. Thanks, Tom, for having me. Good morning. So one of our key themes for 2022, and Lisa actually alluded to it earlier on the program, was this return of dispersion, and really a dispersion rising to normalized levels after being at rock bottom levels for the past few years. And we are seeing that in 2022 so far, both at the sector level, across IG and high yield, and at the idiosyncratic level. Interestingly, even within sectors, against all of the focus on inflationary pressures and supply chain disruptions, we're also seeing the importance of credit selection even within sectors like retail and food and beverage, among many others, for example. So we think that the environment is very ripe for credit selection and kind of stock picking in the bond market, if you will. And so that's a trend that we do expect to continue.
Amanda, I do think going forward, there's also an issue of what the credit market is saying about, frankly, risk appetite in general. And Tom asks me this every morning. He says to me, honestly, Lisa, what's the credit market doing? And I say it seems to be actually confirming the resilience in stocks. Does this mean that even in credit, which is considered, I would say, and this is controversial, ahead of the equity market or smarter than the equity market, do you think that they're pushing off the idea of a recession further than perhaps some of the biggest gloomers and doomers?
Yeah, I mean, I would agree. I would agree with that. I think if you look at absolute levels of the IG and high yield markets today, they are not at all close to recession-like levels. That said, our forecasts do expect some rebuild of risk premia through year end and even into the first half of 2023. So for context, we expect the IG market to move from something around 125 to just over 150. The high yield market will move from just under 350 basis points to something around 500. Those are just point forecasts, and that's by year end 2022. So I think while the market is not indicating at all recession-like levels at the moment, we do expect some widening through year end. I think another point, Lisa, that's really important for credit investors, you know well, is the just importance of the supply and demand technicals that we've seen in the market. And in high yield in particular, gross issuance has been running very, very light. And for the full year of 2022, we think that net issuance will be either flat or slightly negative. And so that's been somewhat of a strong anchor for technicals and spreads more generally, because we just haven't had the large uptick in supply this year.
Lisa, I think something, and you've been better at this than me, I've been greatly remiss on the bear market in bonds. You know, we talk about 6-8% price down. In investment grade paper, Lisa, the Bloomberg aggregate IG on Edge index is down 11, almost 12% in price. And here's the punchline. That's never happened.
Right, that this is a record decline. However, if you talk to people who are in the bond world and the credit space, they're going to say, yeah, but that's all rates. That's alteration. That's not the credit bet. That's not the full faith in these corporations.
Amanda Lyman can say that at Goldman Sachs. Our viewers and listeners, if they own bonds, are getting hammered.
Okay, so Amanda, given that, what kind of outflows will sort of follow on? Do you expect some sort of retail reaction akin to what we saw in 2013?
Sure. Yeah. So your point is well taken, Tom. IG total returns are off to their worst start on record by far. Completely off the charts. I think the one key difference in the IG market relative to the high yield market, for example, is that the IG market does have a large contingent of spread-based buyers, institutional spread-based buyers, but nonetheless, a big part of that market is actually just tracking the index, unlike the high yield market. I think to your point on fund flows, our work has actually shown that in various bear market rate regimes, IG fund flows actually do not chase rates. Again, indicative of that kind of spread-based buyer cohort. And really what we've seen is that if you look at, say, IG fund flows as a percentage of total AUM, those outflows haven't been that severe in the IG market year to date, despite the big sell-off in rates. And then in high yield, we've actually had a terrible string of outflows. We've had, double digits of consecutive weeks of outflows so far this year. We've lost in the high single digits of AUM. But as Lisa alluded to at the start, high yield spreads are still quite range bound and resilient. And so I think that just reinforces one of the views that we've had for a few years, actually, that fund flows in and of themselves do not drive performance. Yes, they respond to the same risk factors that overall spreads do, but one or two or several weeks of outflows in and of themselves does not actually drive significant underperformance.
Amanda, you're one of the very, very best. It's great to catch up with you this morning. Amanda Lynham there of Goldman Sachs on credit. Lisa, I caught up with Bob Michael at JP Morgan Asset Management yesterday, who also likes credit here. And I asked him about 2018 and said whether QT would have the same result, the same ending. And he really takes a very different view on what took place in 2018. He said a lot of that, the recession risk around the Fed hiking story, was born out of the trade war between the US and China. And he believes that that was the catalyst for the weakness and the growth scare, and the Fed was just everything on top. He thinks this time could be different.
That's fascinating. I do wonder also about the idea of quantitative tightening actually causing longer-term yields to go lower, that it would actually slow the economy enough that you would see some sort of flight into duration, and how this would really help credit. Just to point this out, though, high-yield bonds are now yielding, on average, almost 6.6%, if you take a look at the Bloomberg Barclays Index. Remember when they were yielding under 4%? I mean, if you look at the incredible increase, and a lot of this is because of the rate story, people are saying, I can get actual income. I can almost get that 7.5%, 8% bogey that a lot of pension funds look for. This is new.
And that's precisely the point that Bob was making just yesterday, Bramo. Another issue we need to stay on top of as well is the move in American Airlines in a pre-market. The numbers out just earlier this hour, pretty decent. The guidance pretty good too. 10.9% higher in the pre-market. American Airlines doing really, really well. United Airlines doing well as well. Just in terms of what they see for the second quarter, they're looking at domestic demand doing better, steadily improving. But the surprise, I think, for a lot of people, business demand coming back nicely this year. International travel picking up considerably as well.
Yeah, I think the tickets, John, May 11th, Heathrow. I just think
you want to fly in
New York to Heathrow.
For Spurs,
those
Arsenal.
Are tickets that are a fair value for Red Oak, keeper of the Emirates.
And then get in for May 12th for the game that evening. Is that what you're suggesting?
I'm suggesting.
I might be on board with that, TK. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Russian President Vladimir Putin calls it a move that would give the U.S. and its allies something to think about. Russia says it test-fired a new intercontinental ballistic missile. Putin says the weapons will defend the country against outside threats. The Pentagon says Russia followed normal notification procedures before the launch. A $325 million super yacht tied to Russian gold billionaire Suleiman Karamov won't be leaving the South Pacific island nation of Fiji anytime soon. A Fijian court has ordered the detainment of the yacht called the Amadea. The U.S. has a warrant to seize the vessel as part of sanctions imposed following Russia's invasion of Ukraine. Hong Kong is beginning a slow path back to normality as the city's worst COVID outbreak wanes. Gyms and sports facilities reopen today after being closed since January. Restaurants will stay open later and people can meet in larger groups. More restrictions will be eased in the next few months if new cases keep dwindling. A surprising turn of events in college basketball. Villanova coach Jay Wright has resigned after leading the team to 2 national championships. The Wildcats just played in the Final Four, where they lost to eventual national champion Kansas. There's been no word that Wright's decision was health-related or that he's going to the NBA. Villanova's new coach will be Carl Neptune, a former Villanova assistant who's been the coach at Fordham. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The United States growth coming out of this crisis has been stronger and more resilient than any other major economy in the world. And frankly, the U.S. economy right now is in a stronger position than any other advanced economy, even when you take into account inflation. At the same time, inflation is a serious problem, and we need to orient our policy measures to address it.
Brian Deese there, the National Economic Council Director from New York City this morning. Good morning. Equity futures shaping up as follows on the S&P 500. Positive on the S&P by 0.8%, positive on the Nasdaq by a little more than 1%. And the earnings so far, pretty decent from Tesla, from United Airlines, from American Airlines earlier this morning as well. Yields are higher by 3 or 4 basis points on a 10-year to 286.89. And crude, Tom, just settling down around 103 a barrel on WTI, up 0.8% on the day.
John, to me, what's so important here is the VIX in under 20 is a huge surprise, I think, for the Gloom crew. And also the drawdown on, John, the Dow Jones Industrial Average is now under 4%.
Is that right?
Is this a gloomy market?
Year to date on the Nasdaq, we're still down about 14%, Tom.
Fair.
It's been difficult.
But
Some of the single names have had a real hammer.
16% of that 14% is Netflix, right?
If you're in the index, Tom, on the S&P 500, I agree with you. Compared to what's happening beneath the surface, though, it's a real defensive sector bias that Morgan Stanley and a lot of other people have been on top of, too. Take the home builders, the banks year to date. It's been really difficult.
It has been difficult. Let us now talk about the difficulties of Ukraine. And it's not only the land war, of which he's hugely familiar. As a former Marine and co-author of 2034, Elliot Ackerman joins us, but it is on the seas as well. Elliot, I don't know if you talked to your co-author, James Stavridis, the former Supreme Commander of NATO, but you opened my book of the summer, I think a year ago, 2034, off Mischief Reef or Mischief Lagoon in the South China Sea. How did you as a military pro respond that battered Ukraine sunk this ship of the Russian Navy?
Well, I think everyone should pay attention to what just happened in the Black Sea and the Ukrainian sinking of the Russian ship Moskva. What it shows is, really a profound shift in the power dynamics that exist not only in naval warfare, but in all of warfare, in which the undergunned, under-equipped Ukrainians, basically using a swarm of drones, were able to disorient the Moskva's sensors and then hit it with 2 Neptune missiles. So it shows the power of those types of anti-ship platforms, and that's a trend we should be paying attention to as we consider how powerful the U.S. Navy might be when matched against a similar style threat in, let's say the South China Sea or anywhere else.
How will it change, to bring it back to your Marine service, the land battle in Ukraine? How does a naval shock like that affect the prosecution of Mr. Putin's war?
Listen, to go out kind of one level larger is, we have in the West and really with all major militaries, what I would call a platform-centric version of warfare, meaning we invest in these extremely expensive platforms, whether it is our aircraft carriers that cost billions of dollars or our state-of-the-art fighter planes. Our defense strategy is built around those platforms. What we're seeing in Ukraine is the efficacy of anti-platform systems. So not only what happened to the Russian ship Moskva, which was taken down with 2 missiles, but these Javelin anti-tank missiles that are destroying state-of-the-art tanks, or our Stinger shoulder-fired missiles that are destroying Russian aircraft. And to keep in mind, too, the Javelin and the Stinger, those are not new technologies. Those are 1980s, 1990s technologies. So the latest anti-platform systems are even more advanced, and it should cause us to question a national defense strategy in which we're investing all of our resources into multi-billion-dollar aircraft that could be taken out with far cheaper missiles.
Elliot, if we had an hour, I would love to talk to you about what you propose in terms of charting some sort of defense path in the United States. I do want to get your thoughts, though. You've written poignantly about how different the war in Ukraine is than a lot of what you experienced in your former Marine colleagues. And I'm wondering, can you give us a sense through that lens of where we are in this conflict, of how much of an inroad Russia has really made into Ukraine?
Well, I'll preface that by saying, I think this is going to be a long war because you have two sides whose positions are intractable. The Ukrainians are fighting for their families, for their homes, for their very right to exist. And they are highly motivated. They're a nation of nearly 40 million people, and they are not going to back down. But on the opposite side, you have a Russia, at least a Russian regime in the name of Vladimir Putin, who also understands that in some ways this conflict is existential. If Putin loses in Ukraine, whatever that loss would look like, that really would call into question his ability to cling to power in Russia. So to me, those two trend lines just indicate that, this war will go on for some time. And we've seen the battle lines move to the east. I would just add that, as a Marine, as someone who's spent, my 20s and 30s fighting in places like in Iraq and Afghanistan, where oftentimes the cause felt a little bit muddled and the reasons we were there started to drift. In Ukraine, the cause is very, very clear. And who's in the right and who's in the wrong is pretty obvious here. And I think for a lot of veterans of the wars I served in, that clarity has drawn them back, and they want to sort of, in their middle age, go contribute to what's going on in Ukraine.
Elliot, we need to do this more often. Fantastic to catch up, sir. Elliot Ackerman there on the situation in Ukraine. On the energy story, our colleague Javier Blas of Bloomberg Opinion put this one out. This chart's really important. The US exported a record amount of crude and refined oil products last week, surging above 10 million barrels a day for only the second time ever. Javier going on to say the US is acting as the barrel of last resort to a global energy market hungry for oil. Lisa, you just wonder politically how that's going to go down if those kind of numbers continue.
This has been a political quagmire, frankly, for President Biden, who's been called out by green activists saying that he's actually done a complete about-face. And on the flip side, from others saying you haven't done enough to support the fossil fuel industry at a time when that's really helping national security and international security. Javier Blas also pointed out, and I thought this was fascinating, that Russian production of oil has gone down about 10% from where it had been pre-conflict. Not as much as you would think, but you can start to see the response to the fact that people are not buying.
Can we export that much out of the United States going into the midterms if energy prices stay this high?
Well, this
is something they're comfortable with.
This has been the issue also, not only for oil, but also for gas, right? This is why you've seen natural gas futures in the U.S. climb so much, because suddenly the problem in Europe becomes a problem in the U.S. when we're the ones that are exporting a lot of our goods, and then it ends up being a global market more than a regional one, as it has been in the past.
Just fantastic to get Javier to break down that data for us. We'll catch up with him hopefully a little bit later this month. Equity futures shaping up as follows on the S&P, looking pretty decent off the back of earnings on the S&P 500. Up by 0.9%. After the close yesterday, Tesla with a pop, United Airlines with a pop this morning, American Airlines with a pop as well. The Nasdaq 100 up by 1.25%. Yields up by 4 basis points, 287.08. Later on today, you will hear from Chairman Powell and President Lagarde on a panel as they stare down some important meetings in the next month, particularly for Chairman Powell on May 4th, with this market getting behind the idea that this Fed can hike 50 basis points at the next meeting, and then again, and in Citi's mind, then again, and then again. From New York City, this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The world economy is facing some real serious challenges.
Maybe the Fed may be nearing a pause as far as the aggressive rate increases.
There's nothing wrong with being a picky stock buyer in this environment.
It's particularly these moments right now where we feel like the market should do this. Things should get better. Inflation should dissipate.
You see extraordinary moves like this. I hate to say it, but they continue to go until something breaks.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. Thrilled you're with us this morning. What a conversation we had with Claudia Sahm, firing up Twitter right now on the gloom of stagflation versus maybe not. And we're going to continue that conversation in moments with optimism on getting through this crisis. John, we're buffeted by a cacophony of crises.
Well, let's start with the drumbeat of the central bank speakers a little bit later. The drumbeat continues into that panel between Chairman Powell and President Lagarde a little bit later. We know what the Federal Reserve is about to do in May, a 50 basis point move. We know the committee's on board with getting back to neutral, whatever neutral is, something north of, say, 2% on Fed funds. The question, the debate still is, Tom, how much further will they go from there? We know what Jim Bullard would like, a 3-handle, 3.5% by year end. Can he get others on board through the next few meetings?
We see this, John, though, and, you know, we've been talking to equities here this morning. The VIX under 20, futures up 41. John, the sense here is the optimists or the calm down crew are having their moment, given the gloom that we see in so many blogs and research notes.
Through the earnings. So the big issue coming into this quarter, inflation, does it start to hurt demand? Do consumers start to push back? We've heard from the big 3 airlines in the last week, United, Delta, and American, and they're all saying business is tremendous, Tom, and the consumer is looking pretty good. The consumer for the banks are saying the consumer looks pretty good. The problem you have is that when you look at the surveys of the consumer right now, Tom, they are not telling us that they feel pretty good. So it's hard to get that balance right between what is actually happening and what we're told is happening.
And Lisa, to Claudia Sam's fiery comments, it's not about 2 Americas, it's about 4 or 5 or 6 Americas.
Yeah, and if you put them all together, you'd have to read the Beige Book at 2 p.m. that came out yesterday, which I actually did, and I actually found it fascinating. I read a lot of it, not all of it. I'm not going to claim to have read all of it, but Tom Porcelli over at RBC highlighted a couple key passages. He was pointing out that perhaps on the margins, you're starting to see a softening. He said that, for example, there were comments that said some interesting, well, he was saying there are some interesting signs of tiny cracks, including that some businesses may begin to start cutting jobs because they can't find the workers and are paying them too much. And inflation has eroded consumer spending power, dampening demand. So on the margins, you are seeing that in the commentary out of the Fed.
John, in 27 minutes, we get claims. We haven't made enough of a deal about this, but one of the themes of our April conversations is a fully employed America. We've heard that with a force.
You'll get some pushback against that, Tom, but certainly looking at the data points, 180,000 is the estimate on jobless claims this morning. It's pretty decent. And given a starting point for this rate hiking cycle from this Federal Reserve, there are some, of course there are others who take the other side of this, but there are some who believe that things can only get worse and not better, given that unemployment is already down here in the 3s.
I mentioned the data here. I'm going to highlight this once more. The VIX under 20 is a bull market statistic. You see it in a Dow, 1,000 points from peak. But John, S&P, after the Netflix debacle, up 41 points.
Yeah, and Tesla super supportive of what's happening with the NASDAQ 100. Yeah. I'll whip through it for you. The S&P up by 0.9%, the NASDAQ 100 up by 1.3%. On the NASDAQ, Tesla about 4.7% of that index, just in terms of the member weightings. It is number 4, and Tesla's doing nicely in the pre-market. The other issue to look at, just have a look at the bond market. Treasury yields are higher by 3 basis points, 286.31. On the front end, just off the highs for the year, the 2-year yield is higher this morning by 4 or 5 basis points to 262, Tom. Just a little bit of a lift at the front end in the US and in Germany as well.
And on the safe havens as well, gold down $15, 1940. And I really want to point out Swiss franc is the ultimate safe haven. Really pulls back 101, 102 down to a weaker Swiss franc. I'll get it out. A 103 this morning. On this tone of optimism, on this tone of resilience, a measured plan forward, Brent Shooting joins us right now, Chief Investment Officer at People Thinking More Long-Term, Northwestern Mutual. Brent, I love your 5-paragraph note where you basically say, would everybody calm down and look out beyond? How far out is beyond where I can remain calm?
Well, I certainly think over the long term, people should remain calm, because that's the path to prosperity usually, is to invest in stocks and to hold them longer term and not to overreact to the shorter term. I guess the good news in the near term is that I do believe the economy is still strong. Earnings, as you mentioned, are still growing. Look, we'll have a recession in the not too distant future, maybe 2 to 3 years. But between now and then, I still think there are market gains to be had. And all the pessimism that everyone is noting is reflected in investor surveys. And so if I take you to the AAII Bullish Sentiment Survey, which comes out every Thursday, it is a fantastic contrarian indicator. Over the past 10 weeks, you have had some of the most dire bullish predictions of the future. And so in mid-February, we had 19.2 bulls come out. There were only 27 times that number was lower since 1987, and every one of those times gave way to future 12-month returns that were positive in the S&P 500. It was 15.8 last week, and it's 18.9 this week. Those all are consistent with returns that are positive over the next 12 months in the S&P 500.
So when you hear David Bailyn of Citi come on this show in the last couple of hours and say, bonds are back, get them back in a portfolio, yields are back near 3%, you want them, what do you say back?
Yeah, look, I still think there's upside in bonds. I mean, think about what the Fed has done the past few years and think about what the goal of quantitative easing was. The goal of quantitative easing was to decrease the term premium, and it's actually still negative. People don't want any additional compensation for buying 10 years over rolling 1 years or shorter term bonds. That is historically odd, and I think that has room to move higher, especially against the backdrop of what people are questioning: how high is inflation going to be? And so I'm not suggesting that people shouldn't own bonds. I think of things as good, better, best, and it's certainly well to have bonds for the near term expenses that you may have. But from the standpoint of bonds are back, I still think there's room to go on the upside in the near term.
Brett, you say that it's not going to be a soft landing for the Fed. So what's it going to look like if you are still optimistic when it comes to certain equities?
Yeah, I mean, I think people are used to, at least most people in the markets are used to the 25 basis points in a cloud of dust. And so if you think to the tightening cycle we just had, it was 25 basis points and gradual. If you think to the one from 04 to 06, Greenspan, I believe, did 17 25 basis point hikes in a row. This one is going to look more like 94. I think in the near term, the Fed is going to do what they can to get their credibility back. And so they know the neutral rate, which I think Jonathan opened up by saying we don't know exactly where it's at. I think the Fed knows between 25 and whatever that is quite a bit. So I do expect you're going to see 50 basis points for at least the next two meetings. But then I think they're going to be inching a little bit more carefully because they don't know where it's at. And I still don't believe the Fed wants to cause a recession. It's not societally palatable. It's not politically palatable. And I think they're going to err on the side of the bumpiness being on the too much inflation side, which to me means the cycle has further room to run.
When we've been talking about these sector-specific stories, we've been talking about, for example, Netflix versus the airlines, that the airlines absolutely on a tear this morning. How much can you lean into stories like the airlines that are very much cyclical, given the fact that you are seeing momentum there, while at the same time foreseeing a recession in the next few years?
Yeah, we've talked about this in the past, and I've talked about our like for value and small caps, which are areas of the market that people believe, based upon the economic cycle, you should not be in. I think that ignores valuation, which is incredibly important. Right now, valuation on some of these areas is incredibly depressed relative to technology, relative to large cap, and they're expected to grow more this year. And so for me, if you think about that, yes, at some point you want to move to quality and large, but a lot of that is already still in the valuation. And this reminds me a lot of the late 1990s where, yes, we did have a recession, but value and small cap did quite well into that. And then even after that, they did quite well. And so right now, I still think there's opportunity there because I don't think a recession is coming in the next couple of years.
Brent, talk to me about Netflix and how you reacted to that yesterday. What were you thinking when you saw that move?
It's along the lines of what I've been saying for a while. There are some parts of the market that are bid up on dreams of earnings way out in the future. There are some parts of the market that are bid up on investor optimism and stories about what they can be and what they are right now. There are parts of the market that have been bid up based upon people not returning to public and people staying at home forever. And I think all those are kind of coming, the air is being let out of those. And I think, the market right now is certainly down a bit. But if you look at some of these hope streams, themes, and meme stocks that we've talked about, some of these ETFs that invest in those areas of the market are down 60 to 70%. And so I think you want to stay in things that have earnings in the here and now, which are things like the airlines. That's a return to public type of thing. So I think there's still opportunity there as we continue to normalize the economy.
Brent, fascinating stuff. As always, this market, just wonderful to follow and painful to invest in sometimes. Brent Schutte of Northwestern Mutual Wealth Management. It always fascinates me, TK, to see such a well-researched name like Netflix, so heavily researched, so well talked about, have a move of 35% on a given day.
John, you're getting me. Lisa, he's getting me in trouble on a daily basis. It's like we're married.
Just say what you think.
Yeah, I was about to say. You haven't said anything.
Just say what I think. Yeah, okay. I think a lot of very courageous people for 2, 3, and 4 years said, wait a minute, and they're Dan Ives is coming on, and I'm sorry, his colleague Michael Pachter absolutely nailed this. I mean, there's no other way to put it. John, I want to talk about something out there for the optimists.
Sure.
Marko Govanovic, in the wonderful J.P. Morgan 100-page energy piece yesterday, ends his note by saying an energy Marshall Plan is what we're going to see. That's the same as David Folkert's Landau talking about the capital investment that will be required in Europe, given the change in this war. These are huge investment responses, which typically have good financial outcomes.
Well, Deutsche Bank, in the meantime, telling everyone to prepare for a hard landing, Tom.
Well, that may be the micro, that may be the near term, but I'm talking the bigger, broader that you just heard from Brett Schutte there is underpinned by let's do it, let's get going. And that's what you hear from J.P. Morgan on energy demand.
I mentioned Netflix because in the pre-market we're down another 4%.
Wow, I didn't know that.
Yeah, down another 4%, still not settling down. We are positive on the S&P, up 0.9% on TV and radio. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Russia's President Vladimir Putin has declared that his forces have seized the Ukrainian port city of Mariupol. It would be the biggest city taken during Russia's 2-month invasion. Russia's defense minister says more than 2,000 Ukrainian troops are still holed up in an industrial complex in Mariupol. Putin's demanding that those troops surrender. The U.S. Justice Department will appeal a federal judge's ruling that threw out that mask requirement for public transportation. That sets up a legal fight that could last beyond the midterm elections. Many airlines have now dropped their own mask rules, but some transit operators have left the requirement in place. And American Airlines reported that corporate and international flying are coming back. That has its shares surging. American projected a second quarter profit as offices reopen and travel restrictions are lifted. Airlines have cut capacity, and that's allowed them to boost fares for the summer vacation season. And shares of Tesla also rising today. The electric vehicle maker reported better than expected results for the first quarter. It easily beat estimates with a record profit. Tesla CEO Elon Musk predicted that output will grow at a fast rate the rest of the year, and that's despite those supply chain issues. And Nestle is hitting consumers with its steepest increase in first quarter pricing in more than a decade. The Swiss company has boosted the cost of everything from Nespresso coffee to Purina dog chow. Prices rose some 5.2% in the first quarter. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
It's about earnings and cash flow, and we're getting to a different metric, which is not good for a company. It's a growth stock. I think for the rest of the industry, like, you're gonna have a hard time selling me on a sum of the parts story using revenue multiples, because that's what Netflix has. The market has finally seen this the past year or so, has rethought how they look at these companies, which to me is healthy.
Michael Nathanson, great to catch up with him yesterday, the founding partner and senior research analyst of MoffettNathanson. Netflix again this morning, lower by 3.4%, just not quite as much as yesterday's session. Equity futures doing okay, up 0.9% on the S&P. On the Nasdaq 100, up by 1.2%, helped out by one single name on the Nasdaq, helped out by Tesla in the pre-market, doing nicely this morning. TK up by 7.5%.
Yeah, there it is. And what we're trying to do here at Surveillance is talk to the smartest people on Wall Street about this. And in the battle of buy, hold, sell, people keep score. Dan Ives is a complete pain in the ass because he's been so right on big tech, often quoted and all the rest of it. But John Farrell, I want you to go to Mr. Ives here on the debacle we've seen in the last 48 hours, including the good news on Tesla. And the backdrop of this, folks, is Ives' colleague Michael Pachter nailed it on Netflix. John?
Just in a major way. Dan Ives joins us now. So, Dan, let's start with the broader picture. We were trying to work out whether we had a Netflix problem or a market problem. Which one is it?
I think it's a Netflix problem, and I think you have a Facebook problem as well. I think what you see more and more, it's a bifurcated tech tape. And I think the work-from-home beneficiaries are going to continue to trade off. I think that's catch a falling knife. But what we see with Tesla, we'll see with Apple next week, Microsoft, cyber, semis, that's going to lead tech higher. I just view it as a have and a have-not, and Netflix is clearly a have-not. It's not a market problem. It's company-specific. I believe it's a strong tech earnings next month.
You mentioned Facebook. That was down yesterday by 7.8%. That was brutal. You mentioned Apple as well. So let's talk about the relationship between, say, Apple and a Tesla right now. It's China, Dan. I think the China story is so important. Nomura overnight cut GDP for China this year, their forecast, to a 3 handle. Dan, how important are the issues in Shanghai, and do you think they get them worked out?
Well, I mean, that was the key from last night, because for Tesla, that's the hearts and lungs of the bull story in terms of Giga. Shanghai, you know, and obviously the 3-week shutdown, but Musk talked about it. I mean, it's ramping quickly coming out of the gate, you know, now that it's reopening. I think that's going to be similar to what we see with Apple next week. And I think the street, they're viewing this as sort of a contained issue. Of course, you could still have zero COVID issues in China, but overall supply chain, I think slightly improving. And that's actually going to be something that we'll hear from Apple next week, which is, I think, another boost for Cupertino.
Dan, how confident are you that they can compete well against the new upstart electric car maker, Ford?
Look, I think fundamentally, you know, when you look what's happened right now in the EV landscape, it's Tesla's world and everyone else is paying rent. And I think what you're seeing here is they're further flexing their muscles from a manufacturing perspective. And even despite Category 5 hurricane headwinds in China, I mean, those numbers last night, that's $1 billion beat. And I think it just shows the raising, you talk about raising prices, they're raising prices and demand's increasing. It just showed that's an important dynamic right now. Demand outstripping supply by about 30%.
Dan, how do you determine what a reopening story is and what's fundamental at a time when so many people went into cars, bought new ones because gas prices were climbing, or because they didn't want to take public transportation, or they weren't traveling on airplanes internationally? How much is that also a reopening story versus some kind of secular shift?
Yeah, it's a great point. We take basically what we believe was like a pull forward dynamic, and we saw that with obviously some tech names, even like a Microsoft. And then what's the sustainable demand trend? And what we're actually seeing is the sustainable demand trend for names like Tesla and EVs, and I think in tech, in terms of the cloud digital transformation, I call it a fourth industrial revolution. It's unparalleled to anything we've seen in the last 22 years.
Dan, Netflix ran into some competition, whether it's puny Paramount or it's others that are more sustainable. Any number of EV articles, and I'm going to go to Mazda here, and their idea of sustainable zoom. Everybody wants to compete with Tesla. Are you telling me they're going to maintain revenue integrity given all that competition?
Well, I think it's going to be a rising tide. It's going to lift a lot of boats. It's not just a zero-sum game.
They're going to sustain their unit dynamics.
Oh, I think it's going to amplify, because I think we're going to go to 10% automotive that's EVs, and they're going to have a bigger and bigger piece of that. And I think the difference, just when you compare it to Hastings and Netflix, hubris, they continue to raise prices. Others all eventually kind of caught up. And the difference with Tesla from a battery technology and continuing to build out factories, that's the difference between someone like a Musk and a Hastings, seeing forest for the trees. They're one step ahead. That's why we saw last night's numbers.
Dan, why did no one on the call ask about Twitter?
Look, I think right now that was one where, no one wanted to spoil the party, in terms of obviously a Tesla-focused earnings. Obviously, look, Twitter, it's the clear elephant in the room. The collateralized stock in terms of what he's ultimately going to need to do with Musk, with Tesla, as well as SpaceX. But I do believe there will be other times to ask that, because this soap opera is just starting, in terms
Dan,
of
you've got to get
Musk
stuck
going after
in
Twitter.
sometimes and spoil the party. That's just how these things work. Dan Ives of Wedbush. Dan, it's great to catch up.
That's how these things work.
You see this in journalism sometimes as well, don't you? But I have a lot of sympathy with the analyst community, Tom, because the reason, and we all know why you have so many holds and not many sells, is access to management.
John, true story. Major European telecom. They bring a spin-off public, some kind of bolt-on or whatever. We're on the conference call. There's got to be 150 people in the call, and it's all these nice questions, as you allude to. And the lovely woman from the Wall Street Journal asks a bulletproof question about paragraph 3, page 242 in the prospectus. They literally hung up the phone in real time.
And she didn't get invited back for a question ever again, I'm sure, Tom.
I mean, they're brutal. The protocol is brutal. I'm not saying it's good, but it's brutal.
But the numbers were good from Tesla yesterday, up by 7.5% in the pre-market. That number looks good. American Airlines looks good. United Airlines looks good. Data last week looks decent. Tom, the equity market's doing okay this morning as well, up 0.9%.
What's Tesla going to do when there's 40 Teslas out there to compete?
Well, the question
against?
you're asking, Tom, are you asking whether we wake up one morning and we have a Netflix-type scenario where the big winner wakes up to massive competition?
The valuation of a PE of 200 or 400, I mean, it doesn't matter what it is, given the presumed competition that's coming down the pike 2-3 years from now.
It's not just presumed, is it? Look at the demand right now for the F-150, Tom, through the roof.
I frankly don't even, I saw a photo of it. That's all I knew.
It looks pretty cool. Has Matt Miller got one yet?
I don't know. What's it cost? It's a lot of money, right?
Bramo?
I don't know.
I don't know how much it costs. You think I've done lots of research?
In to say something.
No, I was just going to say. I mean, well, yeah, he's still filling up his Hummer. I just think that it's going to be a really complicated zone. I think lithium reservations, how much people can actually get the supplies, is going to be key.
There we go.
She's so tech.
I know.
She's an engineer.
So up to date. That's what I was waiting for. Just the Bramo take on these things.
Really?
Up 0.9 on the S&P from New York. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Justin in the control room says $30,495, the starting price for an F-150 truck. I mean, I imagine it goes higher, much higher from there.
Beyond 80,000.
So there you go.
Wow.
Futures up 0.8% on the S&P, on the Nasdaq 100 up 1.15 with a really, really nice jobless claims print. Let's get to Mike McKee for more. Hey, Mike.
Just keeps getting better, John. And this week counts a little bit more than others because it was the week in which the payroll survey is taken. 184,000 jobless claims, initial jobless claims filed that week. That is a decrease of 2,000 from the revised level of 186,000. So it does show the labor market remains extremely tight. Now, the other thing we're watching here is the Philadelphia Fed. Their business outlook comes in at 17.6. The prior number was 27.4. So that is a little bit lower than we had anticipated, that the market had anticipated. Waiting for the prices paid number to come up. That's going to be the thing that Wall Street cares about because obviously now we are all on inflation watch. But in terms of the employment situation, it remains good.
184, a fantastic number. Mike McKee, thank you. And a high of the year, a fresh high of the year on the front end of the Treasury curve. Your two-year yield right now, 263.21. Very briefly at 264. The equity market looking decent too. The Nasdaq up 1.2%. The S&P up 8 or 9/10%. Because the earnings, TK, this morning have been pretty decent as well. Tesla yesterday, United Airlines yesterday, American Airlines earlier this hour.
I think pretty decent sort of captures it here. I like your idea, John, earlier about the lumpiness of the market, even when the index is up. How many people out there actually know, John, the Standard & Poor's 500 with dividends up 9% in the last 12 months? I didn't know that.
Not many, Tom. I didn't know that either. That's pretty decent performance, isn't it?
And yet there's some of these disasters, as we saw yesterday with Netflix. It is not a public relations disaster, but it is a reality when you are in private equity and the fat cats on Wall Street and you go out and buy up American real estate. It is controversial. With a controversial conversation with the president of Blackstone, Jonathan Gray. Arshanali Basak.
Thank you, Tom. We do have Jonathan Gray joining us in just a second here. I want to run through what happened with Blackstone in the quarter really quickly because you do have shares jumping, erasing its losses for the year here, and you do have real estate helping Blackstone soar in their performance in the first quarter, and you have them getting just a hair away, very close, Tom, to that $1 trillion in assets mark. So Jonathan Gray, thank you for joining us here. I want to start here with you on that real estate business, because no business did better for you than opportunistic and core plus real estate. And so when you're looking at this market, this soaring real estate pricing market, how long does that dynamic last for?
So, Shonali, it's great to be here. I think in real estate, it is a bit of a tale of two cities. A number of areas of real estate actually are still facing big pressure. If you think about older office buildings in cities, if you think about regional malls, where the fundamentals are challenged, where rising rates will put pressure on these assets, it's not as good a story. We fortunately have picked some good neighborhoods to deploy capital in real estate. We've really focused on global logistics, which has been by far our biggest theme, rental housing, life science office buildings, increasingly making a bet on a recovery in hotels. And in those areas where you have shorter duration leases, strong demand, income can continue to grow to offset these inflationary pressures. So there are headwinds from rising rates, but owning hard assets in the right sectors in this kind of environment can be a good thing.
John, you're being a little meek in terms of how much exactly you've invested in the last year. In housing, $13 billion. 2 days ago, you announced an all-cash for campus housing, $6 billion last year for single-family rental. That was 7,000 houses at the time. And this year, another $6 billion on an apartment community business. So if anyone knows what's happening in a tight housing market, it's you. How big of a problem are these rising prices for the American home buyer?
So the challenge on housing has been many years in the making. If you step back and look at the supply picture, we have been building housing at half the rate we did prior to the financial crisis as a percentage of population. So for a decade, we built up probably a 5 million home shortage. And that imbalance, particularly after all the stimulus that came out from COVID, people's focus on where they live, has led to this sharp increase in pricing. And so I think that's going to take a while to work through. Mortgage rates going up is going to make it harder. Costs going up for builders is going to make it harder. And it's really about new supply coming online. We think capital moving into the space helps, encourage new building, which is really fundamental here. But you're right, at some point, there are some limitations in terms of how much folks can charge for a new home or rental prices because of earnings. But the long-term picture for housing in America from a value standpoint is pretty good because of this long-term shortfall that's built up.
John, I want to shift gears a little bit here because a lot of the troubles we saw that we heard from the biggest banks, the idea of deals slowing down, we're not seeing it right away in your performance. In fact, you're part of one of the largest deal announced and talked about this year for Atlantia. So what does this mean about your propensity to deploy capital, and how big can you see yourself going when it comes to buying assets? Where are you looking for opportunities?
So I would say it really speaks to the breadth of our platform. And we did announce this year 4 large transactions that share some characteristics, but they speak to our global reach. We committed to buy the largest casino company in Australia, the biggest last mile logistics business in Europe. Also in Europe, you mentioned the large transportation infrastructure company, and then the student housing deal that we've talked about as well. These are all big businesses. They're not all, one of them involved our private equity business. A couple of them involved our real estate business, also our infrastructure business. And we do this globally, and that allows us to deploy capital. We also, because of the scale of our funds, can do things that are bigger. And where we have high conviction, we lean in. And in these areas, these are hard assets. They've got good underlying fundamentals, not as much exposure to input costs. And as a result, we feel good about investing in these areas. So I think one of the things for individual investors to think about is in a volatile market like this, do I want to sit on the sidelines and just hold cash? With inflation, I think that's actually risky. So owning hard assets and things you have high conviction in makes sense. And what you're seeing is an expression of that high conviction.
John, there's assets you're willing to buy, but then there are deals you may pass up on. The Financial Times reported this week that Blackstone is probably going to pass when it comes to Elon Musk and the bid to buy Twitter. What does this mean in terms of what opportunities you might pass up on, whether it's in private equity or in direct lending?
Well, we don't really comment on individual deals, but every transaction, we look at the merits of a potential transaction based on the risk return for our investors. And that's been our story for a long time. As investors, it's like a batter sitting there in the batter's box. You don't swing at every pitch. There are things that make sense, and you look at it through the lens of what are the risks out there? What does the environment look like? Today, of course, the inflationary prism, the rising rate prism, very important as you deploy capital. But I wouldn't look into any individual transaction as a sign to what we're doing.
So before I let you go here, I'd love for you to comment on the geopolitical tensions. I know you don't have any investments in Russia, but you have worked very closely with China over the years. And there's a lot of questions both about the slowdown you're seeing there in terms of growth and the relationship between China and Russia. What does this mean for you in the way you're thinking about investing in China?
Well, in China, I would start by saying this is the second largest economy in the world. We subscribe to what the Commerce Secretary said, which is engagement through business helps mitigate tensions. That being said, you've got to be mindful that there are tensions today on both sides and be selective in where you deploy capital. In China, we primarily have invested in the domestic economy, mostly in real estate, mostly in logistics, which has been our big sector around the globe. And we've been pleased with that. But they are facing headwinds near term. You have to acknowledge what's happening in COVID, what's happening in their housing market, their capital markets. All of that means it's a more difficult environment. But long term, I think China will grow quite a bit.
John, thank you so much for your time. We're looking forward to catching up with you again soon. That's Jonathan Gray, President and COO of Blackstone, very close to becoming a $1 trillion asset manager. John.
Hey, Shanali, brilliant. Thank you. And Bramo, just going through some of those comments there, 8.5% inflation, is that an environment you want to be sitting in cash with at the moment?
Frankly, the answer is no, especially when you can actually get income from a lot of credit that is fixed over a longer period of time when inflation is expected to come down. And that is the calculus that many people are making, particularly in the private credit space.
Just to run you through the schedule, coming up a little bit later this morning, in the next hour, we'll catch up with Scott Kirby, the United Airlines CEO. This comment just came from American Airlines just moments ago, Tom. They see business revenue 90% recovered in the second quarter. What a change that is.
Yeah, what's great about Scott Kirby is he's an operational guru. This is a guy, John, who was in the trenches at American, U.S. Air, and the rest of them as well. We're going to talk to him after you, John. I'm really, really looking forward to it. John, I need you to explain this right now. Guys, give me Mr. Macron again. This is granular politics we would never see, John, in the United States of America. Mr. Macron is in it again like he was a few days ago. He's just like squeezed in.
I need to see what you mean, Tom.
I don't know where it is. I was asking for it, but the answer is, John, the physical nature of the French campaigning is absolutely stunning.
Can you give me an idea of the picture you're looking at?
The people.
You mean this? The questions he's facing.
The people are like 6 inches away from him. Stunning.
The way they do politics in Europe. Are you suggesting the French leader might need a little bit more security, Tom?
I don't know. You tell me. It's absolutely original.
Coming up a little bit later, we'll hear from the President of the United States as well. We'll take those comments live on TV and radio. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russian President Vladimir Putin calls a move that would give the U.S. and its allies something to think about. Russia says it test-fired a new intercontinental ballistic missile. Putin says the weapons will defend the country against outside threats. The Pentagon says Russia followed normal notification procedures before the launch. And Hong Kong is beginning a slow path back to normality as the city's worst COVID outbreak wanes. Gyms and sports facilities reopened today after being closed since January. Restaurants will stay open later and people can meet in larger groups. More restrictions will be eased over the next few months if new cases keep dwindling. A $325 million super yacht tied to Russian gold billionaire Suleiman Karimov won't be leaving the South Pacific island nation of Fiji anytime soon. A Fijian court has ordered the detainment of the yacht called the Amadea. The U.S. has a warrant to seize the vessel as part of sanctions imposed following Russia's invasion of Ukraine. And another twist in that months-long takeover battle involving billionaire Carl Icahn and Southwest Gas. Icahn says he will not be a bidder in the company's strategic review. Southwest rejected an earlier bid offered by Icahn and says it has an indication of interest from another potential buyer. The U.S. moratorium on student loan payments is scheduled to be lifted at the end of August. Still, more than half of borrowers said they wouldn't be able to make a single monthly payment today if they had to. That's from a new survey by Pay It Off, a debt infrastructure company. Payments and interest have been paused on student loans since the beginning of the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
can ESA help humanity take its next giant leap?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
They have more money to spend, and they aren't borrowing on their lines. The credit card balance is still $20 billion off. All that says there's a lot of dry powder on the consumer side. So that's the tension. So that's the good news. I don't know what they say and worry about, but I can tell you on a given day, they're spending money and engaging in the economy.
The digital banker, Brian Moynihan, Bank of America Chief Executive Officer, there in conversation with one David Weston as well. It's been off her radar today, yen at a 128, but Kriti Gupta never has Japanese yen off her radar. She has a vision back 10, 20, 30 years.
Well, one of the big topics, Tom, is going to be, are we starting to see intervention when it comes to the Japanese yen? We know the BOJ has been very active in the Japanese bond market in this kind of face of an inflationary environment where a lot of people are kind of flocking to the dollar, to U.S., or I should say to the dollar in particular, because of those interest rate differentials. The result of that is that yen weakness. You mentioned 128, but the last time the BOJ actually intervened with the help, I should say, of the United States was back in 1998 when you had a dollar yen hit 148. Then again, some steepness in 2002 where it hit 135 for our radio audience. And the issue was, do you intervene once again? Now remember this, there are two sides to this trade, the dollar side and the yen side. Once again. Now remember this, there are two sides to this trade, the dollar side and the yen side. So any movement from the BOJ has to come with the cooperation of the United States as well. And that's what you saw back in 1998. The question is, do you see it again in 2022?
Thank you, Kriti. Greatly appreciate that. A lot of talk about that, that round number level of 130, weaker yen. We're not there yet as well. Now, a 2-hour conversation with the gentleman who does the Masters in Business podcast, Barry Rittenholtz. There's so much going on. It's been way too long, Barry, since you've been on the program, and I'm so sorry for that. But I, threw a dart at the Abramowitz dartboard, and we came up with, Barry, Netflix. There are, on the A&R screen, Barry, 54 opinions on Netflix. Why do we need 54 buy, hold, sell opinions on any given stock?
Well, if you want to do syndicate business or secondaries or underwriting, you need somebody to go out and sell that sort of stuff. But if you're an investor, those opinions are pretty meaningless. And I think as we all watched the downgrades earlier this week, Netflix from their October highs was down 50% before this week. And then they fell another 27%. And that's when the downgrades happened. Wait, down 70%? You think maybe I should now lighten up on Netflix? Really? Thanks. Thanks so much for that.
Barry, what's so
brilliant
important
insight.
here, and I don't want to get into like a criticism of sell side. Everybody knows I've been a victim of it, and I cash my paychecks in it as well. But Barry, what absolutely fascinates me here is we treat the buy, hold, sell security analysis of something like entertainment, streaming, Netflix, the same way we treat a ball bearing company in Ohio. You can't do that, can you?
No, you can't. And when you look at Netflix, you're really talking about intangibles. And if you really want to learn about intangibles, you have to read some of the works from people like Michael Mauboussin, who's been writing about this for years and has correctly assessed that for the most part, we've been undervaluing technology. And the market seems to have agreed with him over the past decade on a specific stock, especially something so work at home, live at home, pandemic, lockdown related like Netflix. There's now lots of competition. People are going out into the world and living their lives. This shouldn't have been a surprise to anybody if you have a functioning brain, but yet it turned out to be a huge shock to so many people.
Barry, this is a story that possibly would be a specific stock story maybe 2-3 years ago. But now it's a $100 million market cap company that accounts for a significant part of the NASDAQ. With Facebook, or Meta, if you want to call it its new name, same kind of story, even though we saw it also fall out of bed after releasing some guidance. How much are these specific stock names, particularly in the tech world, taking on new importance to understand on an index level?
Well, all of these are specific stories, and the question that you're really asking is how much of this is dominated by the company specifics and how much of it is part of a broader trend. Look, I'm in the camp that the economy is doing great and getting better, that people are coming out of their lockdowns, that they're very tentatively removing their masks and going out into the world, and that the household, the U.S. consumer, is still in very good financial state. So therefore, we should see a lot more consumer spending coming out. That said, it's pretty clear that the index story of the past decade has brought a lot of good and bad up. And now we're starting to see that sifting point, separating the strong, ongoing, sustainable business models relative to their valuation from perhaps the companies that don't support that valuation. Before I forget, one last point, since we started talking about the analyst community, you know, there is a little bit of survivorship bias here in that the most talented, insightful, actionable analysts have, many of them, not all of them, but many of them have been scooped up by the buy side. And the Wall Street world of analysts isn't what it used to be, given hedge funds, private equity, venture capital. A lot of the best talent from the big shops have migrated either west or to Boston, to New York, to DC, where they're working in very, very specific areas and not publishing publicly.
Or they're analysts who, when you look over their right shoulder, you see Baby Yoda, like you do with Barry Ritholtz. Barry, thank you so much. On radio, Ritholtz has the bookshelf with I don't know what, Lisa, what the character from Mandalorian.
Yeah. I think that Yoda is from Star Wars, but maybe I'm mistaken.
Yeah, well, Mandalorian's an offshoot of Star Wars that maybe we'll save them.
All right, well, let's save ourselves. I'm wondering going forward of how interesting this opening bell will be, particularly for the airline stocks. I'm still looking at American Airline up nearly 12% now. Well, a half an hour to go to the opening bell, and this comes after saying that they're seeing more demand than even in 2019 before the pandemic in the second quarter. And I do wonder, okay, so how much does that mean they can jack up prices? How much can they actually get the staff back in the doors that they need to, given the fact that there's so much demand for pilots and there's so much demand for flight attendants?
It's a raging debate. Paul Sweeney is joining me here in 6 minutes on Bloomberg Radio. Paul, Lisa's been way out front on this, way out front. He says just simply everywhere he travels, the planes are packed.
Yeah, 100%. I mean, honestly, remember when we used to have seats in between that were kept empty? That would be a game changer. Meanwhile, we are seeing some dynamism on that. I do think there was a really interesting article in the Wall Street Journal. Nick Timeros came out and said that actually he expects, or there is an expectation that Fed Chair Jay Powell is going to indicate 50
Lisa, we got such a research combine here. Chart Banner comes in and says it's Baby Grogu is Baby Yoda's.
Grogu.
Grogu. Okay.
Thank you.
News you can use. Let me give you a data check to help you out to get you through this morning. Gold comes back. Safe Haven's quiet at 1950 at the ounce again. Thank you, Kriti Gupta, for that image. 128.15 on yen. Safe Haven. Swiss franc gives way as well. Some optimism on the tape with futures up 41. Dow futures. Good morning, John Farrell. Futures. Dow futures up 241 points, and the VIX nicely set under 20. Jane Herman, one of my favorite people from the Woodrow Wilson Center at the 12 noon hour. This is Bloomberg. Good morning.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York City this morning. Good morning, good morning. The earnings so far, after the close yesterday, pretty decent. This pop higher, pretty decent too. Up more than 1% on the NASDAQ. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Looking ahead to Chairman Powell.
It's Jay Powell.
Jay Powell, Chairman Powell. To me, the messaging is clear.
Need to normalize as quickly as possible.
The Fed's not doing enough.
Part of what the Fed needs to do is tighten financial conditions, and they haven't really done that too much yet.
This process of the Fed slowing down the economy is taking time.
We are still far below any estimate of the neutral funds rate.
May is now baked in for 50 basis points.
A 50 basis point hike in the next meeting.
The base case is that June is 50 basis points as well.
It's sort of the logical outcome of the go big, go early approach to policy.
The more hawkish members are trying to talk markets into tightening financial conditions.
Fed is much more hawkish than they've ever been.
The equity market is volatile.
It's the equity market's way of saying the Fed's going to go too far, too fast.
Investors are bracing themselves ahead of this big Fed move.
Joining us now to discuss TD's Priya Misra, Evercore's Julian Emmanuel. Let's start with you, Priya. What are you looking for from the chairman a little bit later?
So we expect Fed Chair Powell to seal the deal for this 50 basis point hike in May and a series of 50 basis point. We're actually looking for another 50 in June, possibly a third 50, and really reinforce that the Fed wants to get to neutral, that they're responding, to inflation. They're highly committed to price stability. But I also think he's going to be careful about talking about, going well above neutral. I think he's going to say, as we get to neutral, we'll reassess. QT is also going to be tightening, financial conditions, and the Fed will assess all that once they get to neutral. So I think he has a very fine balance here that the Fed is going to do the right thing, but not overdo it, because the market is getting nervous. We're pricing in well over neutral. And I think that's why he needs to temper some market expectations. that the Fed is not just blindly going to follow realized inflation and hike all the way into the next recession.
Looking at the front end of the Treasury curve this morning, your two-year yield, the high of the year, near the high of the session too, 263 up 5 basis points. Julian, trillion-dollar question, how well priced are we for the rate hike cycle that Priya describes?
Well, I think Jim Bullard said it himself on Monday. With all the commentary, he basically made the case that the markets are pricing in the Fed's path of tightening pretty darn accurately. And I think it's no coincidence that essentially, since he made that comment Monday afternoon, stocks have behaved very nicely. And in fact, what we saw yesterday was a peak at 3% on the 10-year yield, a peak at 1% on the 10-year German bond yield. And then the sellers decided to relax for a little while. And we think that's going to be the push-pull of the next several weeks and months. And likely it's going to be okay for at least the near to medium term.
And seemingly in the near to medium term, every Fed official is on board with this. Take a listen to what Mary Daly of San Francisco had to say.
How quickly should we get there? So accounting for the risks of being too fast or too slow, I see an expeditious march to neutral by the end of the year as the prudent path.
Joining us now is Mike McKee. Morning, Mike.
Good morning, John. Well, Mary Daly and Charlie Evans, two of the bigger doves, now joining the let's move quickly camp. I'm not sure if Jay Powell is going to give Priya what she's looking for today, a more detailed roadmap, because Fed's got a lot of things to worry about. You know, I told you at 8:30 about the Philadelphia Fed. People will be looking at prices paid. Comes in at 84.6. That's the highest since 1979. The Fed has an inflation problem. Their PCE target is 2%, right now at 6.4%. It's more than 3 times their target. History also shows that Fed tightening tends to lead to recessions, but there's a lot of uncertainty out there. Ukraine, China, COVID, supply chains. Powell will probably talk about that, although Alan Greenspan once said uncertainty is the base case for a central bank. Now, the question is, what's the economy telling the Fed at the moment? The Beige Book yesterday, kind of red and green, mixed signals. The growth picture is accelerating, but clouded by uncertainty, the Beige Book said. Not enough workers, but some contacts are seeing slower wage growth. And inflationary pressures remain strong. They're expected to continue. So stop, go. The Fed's path that Priya Misra is looking for, well, they're going to move rates up quickly towards neutral this year, but whether they do it in 50s, 75s, or a whole series of 20s, they're going to be keeping a nervous eye on unemployment and growth. And they're going to do their best to convince the markets that a soft landing is possible. And it's interesting, John, because you look at the Philly Fed number this morning, that big prices paid number, new orders and shipments both declined, things that would have upset the market, but futures right now seem sanguine.
Mike McKee, thank you. On that soft landing, Deutsche Bank just does not see one. Their view as follows. There may be a temptation to let inflation drift at a higher level. We don't think the Fed would risk losing its hard-won credibility. Question mark around that line. Prepare for a hard landing ahead. Priya, are you pushing back against that last line from Deutsche Bank? Prepare for a hard landing ahead.
I am, because I think this inflation is not really Fed-induced. And the Fed going 75 basis points, all due respect to President Bullard, it's not clear that that brings inflation down. So I think if we start to see a deceleration in the momentum of month-over-month inflation, you know, there's base effect. So the year-over-year number is going to look high. I think if by year-end, once the Fed has normalized at least Fed funds rates, and they start to see some deceleration, month-over-month numbers go to 0.4, 0.3 rather than the 0.6 we're seeing, I think the Fed is going to say, look, it's going to take a while for us to get to 2%. We're going in the right direction, but a lot of this is out of our control, energy, food prices, and therefore, you know, and we have a dual mandate. And so I do think that they're going to sound more balanced. They're going to look at that unemployment mandate, and I don't think it's a foregone conclusion that the Fed will give price stability a greater, you know, sort of higher weight, and therefore result in a hard landing. I think they're going to weigh both. And there's also this question of QT. I think QT tightens financial conditions. You know, there's only so much that the consumer can handle. And as the Fed pays attention to that, I think they'll be very careful going significantly above neutral, because then they'll have a stagflation shock, which is even harder for a central bank to handle.
Well, let's try and get a read on what's happening with the consumer first of all. In the pre-market, the airlines are doing really, really well. United, one of them, up by almost 9% in the pre-market. Scott Kirby, the CEO of United, who we'll catch up with a little bit later, said the demand environment is the strongest he's seen in his 30 years in the industry. Julian, it's hard for me to reconcile what the consumer is telling us about how they feel at the moment with what I'm seeing in the earnings from the airlines, one, and the banks, number two. How do you get a clear picture?
So, look, if you're the University of Michigan, you're composing that survey for the last 40 years, you haven't worried about the inflation component. That's distorting the numbers because the concentration over inflation has been intense. The Conference Board, on the other hand, is a labor-centric survey. That's a very good situation. But you put it all together, John, I think you hit the nail on the head here. Personally, I've done a lot of business and vacation traveling for the first time in 2.5 years in the last couple of months. People want to get out. People are going to spend on services rather than goods. They've already bought a lot of their goods the last couple of years. But all in all, given the labor backdrop, the consumer is very steady. And likely what you're going to see is an improvement in attitudes like you saw in the Michigan survey last week.
So let's get to the trade. Ex-energy cyclicals have been tough. We've talked about this big defensive trade, this defensive bias gripping the equity market. Julian, are you ready to dip your toe in? Maybe go further than that, lean the other way?
Well, we actually think, and if you look at it, it's very rare with volatility as elevated as it is this year, that stock correlations would be as low as they are. It's great for active managers. It's a market of stocks, not a stock market. We like the names that have been punished across a slew of industries, yet are having their earnings revised up. Within that, we continue to think that the value story works. Financials, now that we've backed off from an inverted 10s-2s, the sentiment towards financials is improving, as are the earnings outlooks. And industrials, we think there's a lot of ground to be made up there, particularly when you look at a data point like the Philly Fed, delivery times plunging, the beginning of supply chains easing. Very positive for industrials.
Julian, I'll go to Priya on the yield curve in just a moment, but one thing that's not working for me is just that intuitive relationship between banks and yields. Yields are much higher this year. Banks have struggled. Julian, why is that? Yields are much higher and utilities haven't struggled. Explain it to us.
Well, because basically the market has chosen to focus on the yield curve, and probably incorrectly, because frankly, when you look at it, the 3-month 10-year curve has not flattened. 10s-2s, which is the one that people obsess on, went inverted. And when you look at it, the fear of recession, which tends to hit the financials first, began permeating. But the data does not argue for a recession, even though we know both Europe and China are decelerating.
Priya, often when you see a big move in any market, you're looking for a fundamental reason for it. Priya, what gets your attention, I know, is something happening with liquidity here. These are big moves in treasury markets, and sometimes without much of a catalyst.
Absolutely. 100% agree with you. I think, there's a fundamental underpinning of higher rates led by QT as well as, rate hikes or the expectation of rate hikes. But you look at these daily realized moves of 10, 15 basis points or not a lot of flow. I would argue the treasury market liquidity is impaired. When was the last time you had a 100 basis point rise in rates and dealer inventories have barely risen? It just tells you that the dealer community is constrained. We've had the leverage ratio, we've had GSIB, a bunch of bank regulations that have, I think, curtailed, dealer capacity to intermediate risk. And then you have the high frequency funds that when volatility is high, they step away. So I think what we're seeing is a much lighter depth in the fixed income market, particularly in treasuries, which means that same flow is having a disproportionate impact on markets. So I would say we should be in for a while of these large moves because there is a repricing going on. But the daily moves, I wouldn't panic too much if you see 10 basis points because the market's just less liquid. And I think we have to get used to it unless there's any easing in bank regulations, which I don't think it's happening anytime soon.
Priya, Julian, sticking with us, going into the opening bell about 20 minutes away. Equity futures are positive by 0.9% on the S&P with some movers. It's Taylor Riggs.
John, unbelievable. We have to start with Tesla, just a company that continues to get it done and defy expectations in so many ways. Better than expected top line margins, record profit, right, of $3.6 billion. So a stock that is really a big gainer here on the day. Musk coming out really confident on some of those production gains of about 60% to get to 1.5 million vehicles. United, as you mentioned, John, another really big performer. This also crossed yesterday after the bell, finally looking at a return to profit this year, second quarter margins to be 10%. American Airlines also joining in that, also finally getting to maybe a return to profitability. Second quarter revenue, they're saying 8% higher than the second quarter of 2019. Finally, just to bring you one to the downside, Alcoa is one that we're looking at this morning. Production, they say, is falling about 10%. So you're getting a lot of price target cuts on the street. BMO is one of those, talking a lot about incremental cost pressures, looking to reduce second quarter results by about 15%.
Taylor, thank you. Those airlines, tremendous, really impressive. Delta last week, United after the close yesterday, as Taylor pointed out. American Airlines this morning. We'll catch up with United's Scott Kirby a little bit later this morning. Coming up, China's COVID-0 policy weighing on economies around the world.
Shanghai, supply chain disruptions really impacting, again, sort of American business within China, and then for the global supply chain also has major implications.
That conversation up next.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
These lockdowns in Shanghai, supply chain disruptions, really impacting, again, sort of American business within China, and then for the global supply chain also has major implications.
China's President Xi Jinping urging greater global coordination in fighting the pandemic, saying the following: "We've yet to walk from the shadow of a once-in-a-century pandemic. Safety and health are the prerequisite for human development and progress." Kelly Lyons has more on what that means for that stock market. Hey, Kelly.
Hey, John. Yeah, Chinese President Xi Jinping essentially defending COVID-0 policy, saying that we have to defend the health and lives of people. But for investors, the question is, what about defending the Chinese economy, given data has already shown the impact that COVID-0 has had just in the last couple of months? And the thing is, they're not really getting the supportive policy response they want. No major steps outlined by Xi Jinping in that speech today. You didn't get an LPR cut yesterday. That's just the news over the last couple of days. And as a result, the CSI 300 fell about 2% overnight, lower for a fifth day in a row, and it's now down about 19% year to date. As we know, John, COVID-0 not a new policy in China. It's been ongoing really throughout the pandemic, but China initially led the bounce back in the recovery's early days, but it has started to regress while the rest of the world has opened up, and that has taken both stocks in China and Hong Kong, which are blue and orange on this chart, far behind Western markets. Since the start of 2021, the S&P 500 is outperforming the CSI 300 and the Hang Seng by a margin of around 40 percentage points each. It is a huge gulf. And of course, it's not all about COVID-0. You have regulatory overhangs on a number of Chinese sectors, including technology in particular. But those fears are compounded by broader growth fears and supply chain issues because of COVID-0. The latest example overnight, Li Auto, it's an EV maker, warning that it isn't getting some parts supply from places including Shanghai due to COVID controls, and that new car deliveries will be delayed as a result. That stock down 4% overnight, and a lot of its EV peers down with it, John.
Kelly Lyons, thank you. Picture this. Growth in China with a 3 handle. That's what Nomura is looking for this year. They say the following: owing to rapidly worsening high-frequency activity data in April, the rising number of cities under full and partial lockdowns, signs that Beijing is unlikely to end its zero-COVID strategy soon, we have cut our annual GDP growth forecast to 3.9% from 4.3%. Julian, this is the story right now. The inflation fears have evolved into growth fears around the world, not just the US for the back end of this year perhaps, but for China right here, right now. How does that stack up with Ed Hyman's call over at Evercore for global growth this year?
It definitely moderates things, no question. You know, we took our China number down to 4.5%. Ed took his number in the U.S. down from 4.5% to 3%. But again, it's a little bit different because, as you well know, John, the U.S. economy is much more self-sustained and sort of an insular than the rest of the world. But, you know, there's no question about the fact that at the margin, China is going to cause stress. But the flip side of it is it could be the thing that causes the Fed to continue to reassess as time goes by. And maybe we don't need quite as many hikes. And maybe inflation does come off a bit. And then, you know, you're seeing the ultimate lever of stress expressed in China. The currency starting to move lower after about a year and a half of very puzzling stasis.
Some weakness over the last few days. You brought up the Fed. I'm going to bring up the ECB. Luis de Guindos, the ECB vice president, said this morning: I see no reason why we should not discontinue our asset purchase program in July. Then on the first rate hike, of course, they have to look to the data. From today's perspective, he says July is possible and September or later also possible. Makes sense of whatever you want to do with that. But Priya, the story at the moment for the ECB is they're teeing us up for a rate move this year. Walk me through how far you think this ECB can go, because every single time I bring this up, the prospect of getting back above zero on a policy rate at the ECB, I get pushback. Are you pushing back?
We are. I mean, I think they'll try and get there next year if they're lucky. But Europe is dealing with a stagflationary shock from Russia as well as China. It's much more exposed to China. You know, we talk about the US as being a closed economy, but not Europe. But I do think they're dealing with an inflation problem too. So I think they want to end the APP. They want to start the hiking cycle. How far they can go? You know, I struggle with the Fed going above neutral. I struggle with the ECB getting to zero, but you know, can they get one hike in or two hikes in this year? Fourth quarter is when we do expect them to be able to hike once or twice. And you know, once they start, I think then they're going to realize that their economy, you know, is seeing significant headwinds on the growth front. And I think that's going to slow down their path of rate hikes. So I actually think Treasury bond spread, it's fairly wide. I think it's going to keep widening here because Treasuries, I think, have more momentum with QT for rates to rise. But there's a limit to how much, you know, European bonds can sell off.
Bria, we like to bring up phrases like lose control. Just seeing how things are playing out right now. QT from the Fed coming up, the ECB winding down QE, and the Bank of Japan holding on for dear life, trying to keep that rate at 25 basis points on a Japanese 10-year. As the global anchors of the bond market of the last 10 years start to become untethered a little bit here, Priya, I just wonder how that influences your Treasury call.
It does influence. I think this is the first time, other than the BOJ, which you highlight, and I would say PBOC, we're seeing every other central bank raising, rates, or at least trying to normalize policy. And what that means is term premium, or everything that moves long end of the Treasury curve, is starting to move higher. So I don't think global linkages are getting untethered, but they're largely moving in one direction. But I'm glad you brought up the BOJ, because I think trying to keep the yield curve control at 25 basis points, what that's resulting is significant moves in the yen. And that's actually resulting in an unwind of Treasury holdings by the Japanese. So that's adding to the QT pressure, which is why when I worry about QT, it's not just what the Fed is doing, it's the fact that the Japanese are selling. And, the ECB is trying to step away. And there's a limit to how much these forward, long and real rates, they have risen. That's ultimately what tightens financial conditions. And that's what brings the end of the hiking cycle. And I think we've taken pretty big steps there. I think there's some more room in those long and real rates because of the global linkages and QT. And that's going to mean that the Fed doesn't have that far to go because it's going to start to impact financial conditions.
But let's finish there. Let's say you're right. And let's say neutral is in the low twos, between 225, whatever you think it might be, 225, let's call it that. And the Fed has to stop there. What do you think inflation is into 2023? Where do you see it falling?
I think it's high. I mean, at the end of the year, we have 4.2 on PCE, and then like 3.5. I think we may have to get used to a 3% PCE for the next few years, until some of the rent pressures, for example, which is a lagged effect. I mean, rents will come down. It just takes a long time for it to show up in the data. So I think we're looking at 3% next year.
Priya Misra of TD, Julian Emmanuel of Evercore. This, for me, is the big one. If we do see a mechanical peak in inflation this year, might have seen it in the last few months, what's more important, that or the cumulative damage of inflation running at 3, 4, 5% for the next 12 months or so? That's got to influence things a little bit as well. We'll come back to that story over the next few days. Coming up, the morning calls, and later, one stock shining brightly in the pre-market, Tesla, overcoming supply challenges, rallying on quarterly results. That stock is up by almost 10%. From New York, this is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Earnings underpinning this morning's moves higher. on the S&P, on the Nasdaq too. I'll get my words out. The Nasdaq right now up by 1.2%. That's the price action. Here are the morning calls. RBC upgrading ExxonMobil to outperform, highlighting the refiner's earnings momentum and significant free cash flow. Truist downgrading Twitter to hold, seeing little remaining upside after jumping 40% from its March low. And finally, Wells Fargo raising its Tesla price target to $960, pointing to impressive quarterly results and robust demand. Coming up, demand returning to the airlines as well. United rallying after forecasting a return to profitability this year. A conversation with the CEO, Scott Kirby, coming up very, very shortly. From New York, with futures up 0.9% on the S&P. The opening bell next.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
24 seconds away from the opening bell in New York this morning. Good morning. The numbers from United, decent. From American, decent. From the likes of Tesla, better than good. This market's higher by 0.9% on the Russell, up by 1.2% on the Nasdaq. On the S&P, up 0.9%. There's the opening bell. Switch out the board and get to the bond market. We shape up as follows on Treasuries. Yields higher by 3 or 4 basis points to 286.89. Jobless claims coming down to almost 180k. They're the kind of numbers we want to see in this economy. In the FX market, euro dollar 108.93. A conversation about higher rates at the ECB. That currency pair up 0.4%. A stronger euro there. Crude doing okay, just short of a 104 handle here. 103.98, up by 1.75%. About 20 seconds into this session, we are higher by 0.5%. Leading the way, consumer discretionary up by 2.5%, and breaking down the big mover on the West Coast. Let's get to Ed Ludlow. Morning, Ed.
Yeah, good morning, John. I think you put it right. Better than good for Tesla seems to be the consensus on Wall Street. We're up around 9.5% on the stock at the open. That's the biggest jump since the end of January. They're able to hit earnings per share of $3.22 on revenue of $18.8 billion, despite an environment where supply chain constraints are still there. They talked about how materials costs were high in the first quarter, continued to rise into the current second quarter, and of course there was Shanghai COVID-related shutdown disruption to their production. Even so, they reiterated their guidance for 50% annual growth in 21, and Elon Musk actually said they could do better than that, potentially 60% growth, even though some suppliers raised prices in the range of 20 to 30%. And there are levers they're pulling, right? They were able to raise prices in the quarter because demand is so robust. That's what the street's talking about. This is the terminal chart. When I log onto the Bloomberg terminal around Tesla earnings, you go straight to margins because it's so hard to even comprehend. How is Tesla able to hit 32% automotive gross margin in contrast to an industry that's just completely struggling? And what's more, even if you stripped out the $679 million of regulatory credit, which is high margin revenue, they're still above 30% gross margin, 19% operating margin. That is something that any industry across the industrial sectors would be jealous of. And there's confidence actually going into the following quarters that that will go even higher as volumes ramp up from Austin and Berlin and those efficiencies are passed on. Supply chain constraints are due to last until the end of the year, at least, according to Elon Musk. There were some fun bits, John. I know you love this kind of stuff. A robo-taxi, no pedals, no steering wheel, going into production by 2024. But otherwise, pretty tame performance from Elon Musk. And I just point to Bank of America, who say they're a little bit worried about the stock because they feel it's already priced for perfection.
So, Ed, the question I had coming into this morning is why no one asked about Twitter on the call. Ed Ludlow, why did that not come up?
I use the words of my dear colleague Dana Hull. Why did no one have the gumption to ask a question about Twitter? By Elon Musk standards, and I've done a lot of these calls, this was tame. This was professional and on script.
Well, they've got a great story to tell. What is it about analysts worried about losing access to the company? If every analyst does it, then it's going to be okay. Act together. Ed Ludlow, thank you. Great story to tell. Over at Tesla, of course, for Tesla specifically, that stock is up by more than 9%. That's a $90 billion move almost in the market cap in just a few minutes, in a single day session, potentially by the end of today. Yesterday, the opposite story for the likes of Netflix, raising some big questions about Netflix and the broader tech sector too. Let's get to Taylor Ricks for more. Morning, Taylor.
Yeah, John, I think that you sort of framed this correctly, that maybe in some ways Tesla is a little bit of the anomaly here, because if you come into the print, there were maybe some jitters after we had seen from Netflix. Take a look, of course, at where we're on the NASDAQ 100, sort of the big of the tech companies here. You're still off about 13-14% year to date. And remember, you're still off about 15% from the last record high that we had in November 19th of 2021. You're still, though, at a 32 times trailing earnings versus the S&P, which is at a 23 times trailing earnings. So a little bit of a premium, but that in many ways is quickly eroding. I do want to talk about some of the individual names because you talked about tech and growth. Some of the biggest losers now on the S&P year to date. Netflix, the biggest one of them all. They're now down more than 63% or so for the year. And you get Etsy, you get Meta in there as well. In contrast, the best performers year to date in the S&P, it's all energy and agriculture and value, John. That sort of leads me to the next point. When we think about sort of growth and then value within growth, value within the Russell 1000 growth companies, it's still the value companies and it's still the dividend holders there who were outperforming. So even within growth, there is still that tilt to value.
Big move on Twitter off the back of a couple of headlines that have just dropped. A spike higher in the stock, it was lower. I want to cross back over to Ed Ludlow on the West Coast. Ed, we talked about it briefly. Elon Musk and Twitter not coming up on the call. It's coming up now.
Yeah, breaking headlines crossing the Bloomberg. Elon Musk exploring whether to start a tender offer for Twitter. He submitted a letter on April 13th, basically proposing to require all of the outstanding common stock at the same price, $54.20 per share, which was the original bid, valuing Twitter at that time at around $43 billion. It's just a proposal, but interesting, according to this filing, Musk has a commitment, another redhead crossing the Bloomberg terminal, of $46.5 billion of debt backing his proposal. And this was one of the pieces of reporting coming out of our colleagues from Bloomberg News over the last 24 hours, that Musk was reaching out to potential parties thinking about his options, which were wide-ranging, right, John? Whether he borrowed against the value of his own Tesla equity, even the value of his existing Twitter stake, or if he looked to private equity, even credit partners to get on board. And that is what's happening. And this was a hypothesis that's been around for a while. A tender offer was coming.
I'll save my opinion, Ed, on all of this. I'll let the market do the talking for all of us. At 47 on Twitter right now, what does that tell you?
Yeah, this is the point that Elon Musk has been hammering home, this idea that the board has a fiduciary duty to consider his existing offer, $54.20 a share, which is a premium to where we're at. You speak to M&A experts, you speak to people that have been on boards, you speak to existing investors of Twitter, as I've done, they'll say, well, hold on, Twitter was at $70, $75 a year ago. If there's potential for this business to improve, is $54.20 a share a lowball offer? In which case, the board is following its fiduciary duty because it's trying to get the best possible outcome for shareholders. And each twist and turn, like we're seeing now, this is what we're moving towards, right? A better outcome for shareholders, although, according to this filing, we're still looking at $54.20 a share.
Ed, just one final question from me. Has anyone else come in? Have we heard about anyone else coming in for a bid for this company, given that it looks like the company's in play in a way that it wasn't just a few weeks ago?
Yeah, so by the way, I'm just getting more details on the Bloomberg that the commitments that Musk has on the debt side are coming from Morgan Stanley, Bank of America, and Barclays, and he intends to review that investment on an ongoing basis. Remember the reporting, right? When we talk about Apollo came in, according to sources, all the options were on the table. They could back a Musk bid, but they could also back someone else's bid. And we know about Thoma Bravo, for example. Silver Lake, an activist, already has a seat on the board. And then there's the white knight theory, which I'm not going to go into here, John, but the white knight theory, someone else could try to come and save the day for Twitter. Who that would be? Good, big question.
Ed, great work, buddy, as always on the West Coast. The news on Twitter there, just short of 47 on the stock, up by about 0.6%. Taylor Riggs, big move in United Airlines, up by 10.7% this morning.
Yeah, John, this was interesting. So we got the earnings of United after Tesla yesterday. So, of course, balancing them and then getting American Airlines this morning after some comments that we heard in the last few weeks about Delta, and all painting sort of a similar story. Huge demand really coming back and finally being able to pass that on, those higher costs, those higher fuel costs, as we heard from United that they're looking at jet fuel costs in the second quarter of $3.43 a gallon versus $2.88 in the first quarter, but passing those on to the consumer, and that's leading to maybe a finally return to profitability in the second quarter, finally sort of getting those. And we've really heard that from a lot of these airlines. Take a look at some of the specifics though, right? United Airlines, of course, now looking for that full year profitability and really all about the big summer travel. Is it back? Has it been fueled by leisure? And also maybe a little bit of that business travel, John, that we know has been oh so profitable historically for these companies. And of course, as we mentioned, some of those higher costs, of course, sort of tacking those on to some of those fares. If you've booked recently, you might notice a slight increase.
Just
overall,
a bit, Taylor.
Just a little bit.
Just a little bit.
But as you can see, sort of a big hole to climb out of.
Taylor Riggs, great work as always. Thank you. We get lucky this morning. Joining us now is the United Airlines CEO, Scott Kirby. Scott, it looks great. Your words, the demand environment, the strongest in your 30 years in the industry. I can see a big smile on your face, sir. Where are the positive surprises, Scott, coming from at the moment?
Well, you know, we always expected business travel to recover 100%, and we actually already have our capacity is down 13%, but business revenue is down 10%, and we expect, even though we'll be flying fewer seats, that we're going to actually have more business demand revenue by June than we had in 2019. So I think this quarter, we'll be able to put to bed the whole question of is business travel coming back. But we just see people ready to travel all over, leisure, business travel. I mean, I think one of the things that's happened is, when we went through COVID, when people get back to traveling, we're social creatures. We want to be with people. We need to connect with our customers, with our family. And you realize how much you missed it and took it for granted before. And we see people just traveling more, and it just accelerating. The acceleration is really what's the surprise, if anything, to me.
You said business travel would come back. I doubted you, others did as well. And here we are, Scott. So you were right, I was wrong. You brought up capacity. I want to talk about that with you. Yeah. On capacity, you said we're 13% below 2019 levels for 2Q. How do you see that shaping up by year end?
You know, we've been cautious on adding back capacity. The demand would justify more capacity than we have right now, but the infrastructure just isn't there to support it. While we've been able to hire enough people, you know, you look at the FAA infrastructure, the TSA, everything at the airports, fuel vendors and such. The infrastructure just isn't there yet to support it. And so we're going to gradually add back capacity because we've prioritized operating reliability over the possibility of short-term profits. And that's in contrast to what some others have done. But you know, we're the #1 airline in on-time performance so far this month, lowest cancellation rate this month. And so we're going to see how the system can manage, but we're going to put a priority on operating reliably in the next 6 to 12 months.
You're super bullish over the next 6 months, that's for sure. 2Q, 3Q. Out of those fares that you're looking ahead for and you're bullish about, Scott, what portion of those are actually booked already? How much of this demand is already realized?
Yeah, so, you know, I don't know the exact number, but if you look for this quarter, you know, we probably already have 60% on the books, 50 to 60% on the books. You know, and if anything, you know, we're running out of seats, and you know, we've been tightening down on yield management because we're running out of seats. You know, barring some setback, you know, we're highly confident that we're going to be able to fill the airplanes up. But even as we look further out into the year, the fact that business travel is recovering so rapidly, business travel across the Atlantic, by the way, is already exceeds 2019 levels, and you know, it's just sort of still opening up. You know, makes us just feel really, really confident about the outlook. And look, we have all this with still travel restrictions to Europe. Asia is still shut down. You know, it feels like we're in the first inning of the revenue recovery. We're putting a lot of runs on the board in the first inning, but it really does still feel like it's the first inning of the actual revenue recovery.
Scott, hearing you speak, though, the planes are full, demand is fantastic, prices are going up. My colleague Taylor mentioned that just moments ago. We all experience it as we search for flights, not just at United, but elsewhere too. Yeah. You getting any pushback there whatsoever, Scott? Do you think you can pass this all on to the end consumer?
Yeah, and you know, you use the right words. The fares are going up largely because of the increase in fuel prices. You know, at one point, the fuel price increase for us over the couple of weeks once Ukraine started was close to $5 billion a year in annual expense. And particularly coming out of COVID, you know, we and everyone in aviation had to pass that along. But fares still remain low in historical terms. You know, if you went back 5, 10, 20 years, we're one of the few areas where prices on inflation-adjusted basis are lower. So we're rebounding sort of to a more normalized fare environment. And even still today, you know, if you're taking a trip, I'll bet in a lot of cases, you're going to pay less for the airfare than you pay for one night in your hotel room or than you pay for your rental car. And so, you know, we certainly aren't seeing pushback as you described. Another way I would think about this is GDP, nominal GDP is up 16% since 2019 today. Normally, we kind of track nominal GDP. We're just now getting back to flat to 2019 levels. That would imply at a macro level, you know, there's pretty far to go before we sort of get back to the normal trend lines for aviation.
Scott, just on masks, just quickly, they're off. Yeah. A lot of people are very happy about it. Yeah. I have to say my personal experience, for whatever that's worth, hospitality on the plane hasn't been great, and that's not just United, that's been other American airlines and British Airlines too, where I've just felt this tension between the consumer and the individuals, the company delivering the product. Can we do something about that, Scott, just in terms of customer service?
Yeah, well, Jonathan, I think your problem is you haven't been flying United enough. You're flying those other airlines because it really has been, I say a little tongue-in-cheek, but it really is different at United. You know, all the incidents you read about in the press happening on other airlines, it wasn't that we had zero, but our flight attendants just did a phenomenal, amazing job. You know, I had people at the DOT ask me, are you guys actually not reporting? Because the rate is so much lower. That wasn't the case. The rate really was lower because, you know, we focused on during the pandemic, de-escalating situations and giving our flight attendants the tools and ask them not to be, they weren't, you know, policemen or women, they should de-escalate. And if somebody refused to wear a mask, we'd get the plane on the ground and then we would ban the customer from flying United. But it really has been a different experience on United. I think the most enduring change for us is what's happening with customers and customer service and the real focus from all of our people on the pride that they have in United and really delivering for customers.
Scott, final question from me, and it's a bit of a tricky one. As we return to profitability, I just wonder whether capital return programs return in the same way as they were before. Going into the pandemic, as you know, the airlines were very much criticized for the 5 years into the pandemic, where even the likes of United gave out about, I think, $8.57 billion in buybacks. Scott, will capital return plans be different to what they were before the pandemic, after the lessons we've learned through the pandemic?
Yeah. Well, I guess we should say TBD, but you just put up on the screen that, we had operating losses going through the pandemic at $12 billion. We took on an extra $20 billion of debt to survive. And while we're really, really excited about what the future looks like and where we're headed, thinking about capital returns is not, honestly, it's not anything we're even thinking about right now, because the first priority is to pay down debt, to fill in the hole, as you talked about, that happened through the pandemic, and really restore our balance sheet to an even strong. We thought we had a strong balance sheet before, but we got to get back to an even stronger level before we would even start to think about capital return.
Scott, great to catch up. Numbers are solid. Dude. Stock looks good this morning. Good luck for the rest of the year. Scott Kirby there, United Airlines CEO. The stock up by a little more than 11%. Coming up, stocks rising on optimistic earnings. That conversation up next with Credit Suisse.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
The market is worried about something because it's really historic how defensive the market is trading. The real signal underneath the surface is a market that is really shuddering about something. We think it is saying that we have a cyclical slowdown here, and last night's results, kind of portray our view, which has been all along, that there's a giant payback in demand, not only for the obvious winners of the COVID pandemic, but technology broadly.
Morgan Stanley's Mike Wilson there, seeing signs of a cyclical slowdown. Joining us now, I'm pleased to say, waiting patiently, and thank you for that, Patrick Palfrey of Credit Suisse. Patrick, let's start here, just in terms of the earnings. How do the earnings stack up with the defensive bias we've seen through this equity market over the last few months?
I think what you have is two things going on. I think you have this environment where investors are focused on at least the recent inversion of the yield curve, although it has uninverted, and the positioning that looks more defensive in light of that. But yet there's still strong results that we see, particularly for cyclical groups during this earnings season. Right now, EPS are expected to grow around 5.5% for 1Q. We expect it's going to come in much better than that because the beats are just, once again, really strong, and it's being driven primarily by cyclical sectors: the energy, the materials, the industrials, certain portions of discretionary as well. That's really where the strength is coming from.
Patrick, just in terms of the bear argument, as you know, it started with the multiples. Some of the multiples got hit, and now it's about the earnings. It's about an inflation scare turning into a growth scare. Do you and the team with Jonathan Gollop push back against that?
I mean, look, let's be honest. We're in the midst of a decelerating economic environment, so let's not sugarcoat that. I think the question we need to ask ourselves is, where in the future do we see the recession? And as we decelerate, what are the best opportunities we're seeing? I think the focus is on the deceleration in real economic activity. I think that masks some of the strength we're seeing on a nominal basis in GDP. This year expected to be around 10%. That's why we're seeing revenue so strong, and that's why cyclical groups work in this environment. Because even despite the fact that we are decelerating, the deceleration is coming from such a high level that it really supports a lot of the strength that we're seeing within cyclicals.
So let's be very specific then. Where does that leave the NASDAQ and the tech trade? There are some people lining up to say we will get deceleration at the back end of this year with growth, and that's a reason to lean back into a NASDAQ 100. The Patrick so far this year has been pretty bruised.
Look, I think technology has a really difficult position right here. Valuations, yes, they've come in, still remain quite elevated. They've shown a tremendous amount of duration risk, that sensitivity to interest rates as interest rates rise. So those couple variables really push back against a successful NASDAQ trade throughout the remainder of the year. I mean, we're really encouraging investors to focus on the value area. And if you're looking within the NASDAQ, look more towards the value names. You're going to get less of that duration risk, less of the interest rate exposure. So it's not to say that all of them are going to be under pressure, but be careful and focus on valuations if you're trying to mitigate the risk to rising interest rates.
Patrick, just finally, where does energy fit in here? The big winner of the year. Where does it fit in for you?
I mean, I think right now energy has really benefited near term from the disruption in oil coming from the invasion of Ukraine. The volatility in oil remains high. I think investors need to look through that near-term volatility and see where oil is going to be over the next couple of years. I think as we transition towards a more clean economy, oil is still going to be part of that transition process. And I think that was underappreciated. So I think oil remains well bid, and I think as a result, energy remains a very desirable sector in that backdrop.
Patrick Palfrey at Credit Suisse. Patrick, great to catch up, buddy. Send our best to John, won't you? This equity market this morning doing okay. 23 minutes into the session, equities up on the S&P, on the NASDAQ too, by 1.8%. Your trading diary up next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The earnings look good from Tesla, United, American Airlines. The equity market bounces by more than 1% on the S&P, up by 1.7% on the Nasdaq. That's the price action. Here's the trading diary. Coming up shortly, the President of the United States making comments on Russia. Then, Fed Chair Jay Powell and ECB President Christine Lagarde speaking at 1 p.m. Eastern. President Biden returning later in the afternoon to discuss infrastructure here in the U.S. and closing out the week with the U.S. and European PMIs coming up tomorrow. This week has flown by, for me anyway, and I hope for you as well, going into the weekend. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi